हेलो ये क्या है? Hello and welcome everyone. Let us go ahead. We are doing a chapter called income from other sources, and we have to complete the last part of our chapter, income from other sources. Obviously, everything is a part of section 56. So this is section 56, subsection 2, clause number, any guesses? Clause X. No, bro. Welcome to Chartered Accountancy. When you have no present, where is the question of X? This is not X, bro. What do you think? All this is X, 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 X. Bro, I don't have so many weird fantasies. And even if I do, I will not write it openly. You know, this is what? I nahi. Ye 1. So 2. So 3. So how to write 9? So 10. Section 56, subsection 2, clause. Oh bro, don't talk about X, 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 X. You will suddenly start remembering someone who never existed. Hello. Section 56, subsection 2, clause 10. Receipts without or for inadequate consideration. Receipts without consideration or receipts for inadequate consideration. And for classroom convenience, we use the term gift. Hey, let me make it clear, there is no word called gift anywhere used in the law. No. The law says, receipts without consideration, receipts for inadequate consideration. If I give you gold jewelry worth 5 lakh, free of cost, is that without consideration? That means I have given you a gift worth 5 lakh. If I give you gold jewelry worth 5 lakh and I charge 10,000 rupees, have I still charged less than the market price? That means you still have a benefit of 4 lakh 90. That 4 lakh 90 is also a gift when it is free, full market price. And when you pay something, the difference between the value and what you have paid. But here ICAI is going to play a game with you. So what kind of game? So they will say jewelry worth 5 lakh because market price is 5 lakh purchased for rupees 10,000. Jewelry worth purchased for. And the moment you see the word purchase, your reaction is like purchase. Siren banega. Purchase. It is purchase. No, bro. Even if it is purchased, it is a gift. Why is it a gift? Because you still paid less than the market price. That is inadequate consideration. When you pay nothing, it is a gift. When you pay less than the market price, it is still a gift. The law has used the term receipts without or for inadequate consideration. But then every time we talk about this concept, I can't tell you. Chalo, let's learn which concept. Receipts without or inadequate consideration. Condition 1 for receipts without or inadequate consideration. Condition 2 for receipts without or inadequate. We can't be repeating such a long thing again and again. Chinna Swami, Muttu Swami, Venu Gopalayya. अरे एक्के परम पीले परम बतूर चिन्न स्वामी मुत्तु स्वामी वेणुगोपाल श्रीनिवासन राजशेखरन एक्के परम पीले परम बतूर चिन्न स्वामी मुत्तु स्वामी. We can't be repeating such of the pet name. So we have to use nicknames, no? Like people at home call you what Kutre, a short name. Correct or no? Are those who smiled found it correct, relatable. And those who are still laughing, they're more and more relatable. We have nicknames, no? So we have to keep it short and therefore we use the term gift. Do you understand this? There is no word called gift. Let me tell you one more time, there is no word called gift used anywhere in the law. The law says receipts without, free of cost. Free of cost is receipts without consideration, and inadequate is whenever you pay less than the market price. When you get a gift, is it not like a profit? Something that you are making free of cost? Any gift that you have received is also going to be taxable under income from other sources, subject to the following conditions. Condition 1. Gift will be taxable for all assessees. Once upon a time, about 7-8 years ago, they used to write here, the law was gift is taxable for individual HUF. That means if a firm is receiving gift, if a company or LLP or AOP is receiving gift, it was not taxable. What a big loophole. Think about it. Think about it. Supposingly you are giving me gift as an individual, it was taxable. Idea. I will open a partnership firm with my wife. I will take gift in the partnership firm. Then dissolve the firm. Not taxable. What a big loophole, do you agree? Jetli ji brought about this change. Jetli ji said gift is taxable for all assessees. Gift is taxable for all assessees. Is that clear? So this is no longer a condition as such. Second, the gift that you have received can be money or asset. Both of them will be taxable. You know, I have this strong urge of saying cash and kind, cash and kind, cash and kind, cash and kind, both taxable. But knowing this generation, if I write cash here and I write kind here and you receive gift in check, NEFT, RTGS, Paytm karo, so you'll be like, sir, check, check, check. This is cash, no? Check is not cash. So check will come here. Bro, money in any form. Check, cash, demand draft, money order, Paytm karo, tididing, 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 Google Pay, UPI. It will all be considered as monetary gift, taxable, and 1st October 2009. This date is important, and after learning stock market part, you are aware that there are some amendments which took place once upon a time in income tax law are still relevant. For example, 1st October 2004 will make you understand the STT date. 31st Jan 2018, removal of 1038 for grandfathering purposes. You will have to learn this date. Somewhere it will have an impact. When Pranab Mukherjee sir became the finance minister after 2009 elections. So 2004 to 9, it was Chidambaram sir. Then in 9, Pranab Mukherjee sir, that same budget in which he made short-term capital gain 15%. In 2009, Pranab Mukherjee sir said, what is this nonsense? What a crazy loophole. I give you gift of 5 lakh rupees. Is that taxable? Are you say yes or say no? What will you do with that 5 lakh? He said, I will buy sheds. Okay, so I will buy the sheds and give it to you. Not taxable. Because the law had only one word. Monetary gift. The word asset, the gift in kind, was never taxable. Do you understand again the loophole? Ta-da! Pranab Mukherjee sir added this term, asset. It is 1st October 2009, the date from which gift in kind became taxable. 1st October 2009. So understand what happened before that and why this date is relevant even today. Somewhere it will have an effect in your capital gain calculation. Please understand. In capital gain, while doing special cases of cost of acquisition, we came across a concept, asset received as taxable gift. If the asset was received as taxable gift, that means I have paid tax on the fair market value. So in future sale, that fair market value will become cost of acquisition. When we did sweat equity and taxable gift together. But before this date, there was no asset which was taxable. So if that asset you are selling today, it won't be FMV, it will be cost to the previous one. While doing asset received as taxable gift, I told you that which gift is taxable, not taxable, that I will teach you in IFRS. But do you realize that before this date, any capital asset received as gift was not taxable? Take an example. Supposingly someone gave you gift of immovable property on 1st October 2005. Was that immovable property taxable for you? Gift in kind was not taxable only. That means we have not paid tax on the fair market value. Bolo yes or no? So then now when I sell that immovable property, I have to take cost to the previous one. And if this was not 2005 but 2010, then have I paid tax under gift? Under IFRS? Then I will take the fair market value as cost of acquisition. I will repeat the last 40 seconds due to network issue. Pay attention for those who have not understood. Please understand. Gift in kind became taxable from 1/10/2009. So you have to see, I received capital asset as gift before this date or after this date. I'll take two examples, 2005, 2010. If I receive gift in kind, that is capital asset as gift, in 2005, it was not taxable. That means I have not paid tax. That means now if I sell, I will take cost to the previous one. But if it was received in 2010, was it taxable? Have I paid tax on FMB? That means now I will take FMB as the cost of acquisition. Now go and check that special cases of cost of acquisition where we have written asset received as taxable gift. If it is taxable gift, I have paid tax, then what is COA? Fair market value. And if it is not a taxable gift, I have not paid tax, then what is COA? Cost to the previous owner. Understood? And this is why this date is relevant even today. You find any question of capital gain? No. Mr. X got immovable property as gift in 2003, 4, 5, 6, 7, 8, 2009 before October. Then in all those cases, you have to take cost to the previous one. Understood? But after 2009, you have to check taxable gift or not taxable gift. There are more conditions coming. Everyone is clear? So gift in kind became taxable in our country from 1st October 2009. First time it was asked in the May 2010 exam because it was the latest amendment. And I will tell you what happened in that exam very soon. Today's lecture is going to be really, very, very entertaining. I know you love all the lectures. I know all the lectures have been very, very entertaining. Your ego may not allow you to admit it in front of me. But the fact cannot be changed. The fact cannot be changed also on the fact that when I suddenly tell you that today's lecture is over, 4 hours over, and you're like, huh? Really, sir? It just feels that we just started. Well, apna talent. Apna. Okay? When time goes away, we don't realize is the kind of education which we want to give the world. So I will tell you what happened in that exam later. But for now, condition 1, gift is taxable for all assets. Second, gift is taxable, monetary or non-monetary? Both. But when Pranav Mukherjee sir introduced this, he gave a rigid list of assets. He said, when I say gift in kind is taxable, only if you receive the following things. So supposingly you give me your specs or bag or bottle or etc. as gift, that is still not taxable. There is a certain list given by Pranav Mukherjee sir. He said, if you receive immovable property that holds massive value, it is going to be taxable. Okay, so he has given you a list of assets. Asset can be immovable property. Asset can be shares and securities received as gift. It is going to be taxable. And if you have received the following, see if you have heard this name: sculpture, artwork, drawing, archaeological, big name bro, collection, and then painting. Hey, how you remember this list? So again, your ego may not allow you to admit it, but then there are certain things which help us remember the law as well. And finally, he also added bullion, which was not required. Honestly, he bullion है, बुलिया नहीं, तू याद करे, नहीं, हाँ? कौन है वो? शाहे आंखों का bullion. You know what is bullion? Gold in its raw form. Coin, biscuit, 10 grams का भी coin comes. 100 grams का gold is called biscuit, and 1000 grams, that is 1 kg, is called Cadbury. As funny as it may sound, that 1 kg gold bar today is worth roughly 88 lakh rupees. Price of gold, they are on fire by the way. Wildfire. Last few days, 1 week ago gold price and today's gold price is unmatchable. The gold in raw form, before it is molded into jewelry in the form of coin, biscuit, etc., is bullion. It was not required to be specified because we know the definition of jewelry: anything that contains precious or semi-precious metals or stones. So bullion is already that way covered, and that's it. If you receive this, it is going to be taxable. This was the list given by Pranav Mukherjee sir. Pranav Mukherjee sir. And only 2 years ago, who amended the law? Guess karo, last 2 years, who must have amended the law? Auntie added one more point here. Auntie said, if anybody gives you something called vada, idli vada nahi re. And by the way, it is medu vada. Stop calling it mendu. Medu vada. It is not mendu vada. Vada. Vada pav. Nahi. Virtual digital asset. Vada. Virtual digital asset. See, in income tax law, they can't say Bitcoin. Bitcoin. They can't say Dogecoin. Some people also call it doggy coin. Doggy coin. Don't laugh. It's a good investment. I also have. I purchased at a price of 23 rupees. And 2 years ago, when I told students that you should buy, at that time it was 6 rupees. I purchased 3 years ago at 23 rupees. Then it became 6 rupees. I said it can't go below this. This is the best time to buy. Best means best time. But students were laughing. Today that 6 rupees ka Dogecoin. Last month it was 36. Now it is around again 24, 25. So I am still at no profit, no loss. But anybody who would have purchased at that 6 rupee ka price, now your wealth would have been 6 times in the last 1.5 years. 6 times. Bro, you know how much time it takes for wealth to double? If invested with banks, FDs, 7-8 years. In 1.5 years, this would have become 6 times. But then crypto is a very, very risky asset class. To make investment in crypto, there is only one criteria. Simple. You mentally imagine an amount that you can afford to make zero. That this amount will become zero, I will have no problem. Invest that much. If it works, it works. If it does not, you were ready to make it zero. That is crypto. Sharta, aapne kitne ka? None of your business. Even today I am saying buy, because crypto, especially these, we call them meme coins, heavily and massively promoted by owner of Tesla, Twitter, X, Elon Musk. And Elon Musk is now at the top of governance and decision making in America with Donald Trump returning to power. Do you know Elon Musk is a part of his core committee? Kuch nahi. Nothing. Well, sir, all we know is all agreements are contracts if they are entered into by the free consent of the parties competent to. That sentence also we have fully forgotten. You have no idea of how economy progress, world economy is going on, how the whole world is dependent on America. America takes a decision, it has an impact on every corner in the world. Why? Go do the research. Just imagine, matter of time, because Elon Musk has acquired Dogecoin in handsome and wholesome quantities. You may simply make an announcement, US government will accept payment in Dogecoin. 23 rupees ka crypto is that only, bro. 23 rupees ka Dogecoin will become 1 lakh also, you won't realize. And I am waiting that by chance it becomes 1 lakh, then I will sell everything that I have. 23 rupees ka 1 lakh, it will become what else you want. Sum up, story over. Then don't say, sir, you never give any tip. I don't usually free of cost. But today I am telling you, and record this and keep it somewhere. Okay, ladies and gentlemen, if you, sir, so received as gift, so you can also give us, no, sir. No, but it will become taxable for you, no, so I am not giving. Buy for yourself. See, if I give it to you as gift, is it taxable? So I am not giving. Is that clear? So, ladies and gentlemen, initially, Pranav Mukherjee sir had a fixed list. Auntie has added virtual digital asset, but that's it. Because you know where ICAI will start, wherever your thinking stops, no institute will ask you questions. So I'll talk about that May 2010 exam. One of the biggest amendments in income tax law, gift in kind taxable. You observe point C is directly related to gift in kind. I am writing it also under asset. Monetary gift wala part is unaffected with this condition. Every student before the exam, outside the exam center, trying to convince each other. Hey, important amendment, huh? Gift in kind is now taxable. Gift in kind. Do remember, gift in kind is now taxable. They are alerting each other. warning each other. Be careful. We have a very big amendment. What is the amendment? Gift in kind is taxable. Please make sure if they ask you any question, it will be taxable. Everyone was trying to alert each other before the exam. That gift in kind is now going to be. And they asked a question on that amendment, where in that question the assessee has received a gift in kind. The value of that asset was 6 lakh rupees. So most students said gift in kind, now taxable 6 lakh rupees. Bro, that asset was motor car. Oh, not taxable. Because motor car is not in the list. Not taxable. Khatam. Tata. Goodbye. Bye-bye. Gaya. Institute will start where your thinking stops. They will never ask you direct questions in taxation. They will always twist it and ask. If you receive anything other than this, ladies and gentlemen, no matter how valuable, no matter how expensive, no matter how costly, anything other than this list, not taxable, not taxable, not taxable, not taxable. By the way, most assets that have potential of generating high value are already covered in this list. But yes, motor cars are not covered. And they will ask you questions on those loopholes. You understood? So if you want to give now tax consultancy, I am giving you 6 lakh rupees cash. Will that be taxable? So instead of giving you cash, I should be giving you shares, gold. No, sir. I should be giving you 6 lakh taka. It won't be taxable. Ta-da! Understood here? What happened? So gift is taxable for all assessments. Cash or kind? Both. But in kind, it is only and only a rigid selected list. And that also, with respect to this list, we have the fourth condition. So do you realize condition C and condition D are directly applicable to gift in kind? Because C is list of assets and D is a condition on this list that this asset has to be capital asset for receiver. This asset has to be capital asset for the receiver, then only it will be taxable. Gift in kind will be taxable only if the asset is capital asset for the receiver. First, I will tell you the meaning, then the logic, and then again ICAI is going to play. They've already played in some of the exams. See, what I am gifting you, for you it should fall in the definition of capital asset. So we know what is a capital asset. Section 214. If it is capital asset, then it will be taxable for you. That means if it is not capital asset, it won't be taxable. But sir, going by the list, sir, sculpture, artwork, drawing, archaeological collection, painting, jewelry, immovable properties, shares and securities, they all are capital assets only, sir. No. The logic was that sometimes it is possible that the receiver is doing this business only. And therefore, for the receiver, it is stock in trade. Logic was remove stock in trade. What was the logic? To exclude stock. Think about it. My uncle means father's younger brother, is a jeweler. He's in the business of selling jewelry. If I give him a bullion, jewelry, for him it will be part of his stock in trade. Why this is not taxable for him? Reason samjho please. Because he will make his profit and loss account. On the debit side, the purchase amount of this stock will be 0 because I have gifted it to him. But one day when he will sell this jewelry as a part of his business, so will that sales come here? Which means the profit, that is the full value of jewelry, will come in his PGBP. And therefore, if it is stock for you, it won't be taxable. Understood? Logic. Why it is not taxable? Why we are including only capital asset? Because we wanted to remove stock in trade. Correct? Hai? Meaning clear? Logic clear? Now I will share with you 2 games which I will play with you one by one. Are you clear that whatever asset you are receiving for you has to be capital asset? Because they wanted to remove stock in trade. Because stock in trade will be taxable under PGB. Therefore, we want to. Now the game of IC. My uncle is a jeweler. Jeweler. The jewelry is his stock in trade. Stock in trade. Stock in trade. Not a capital asset. Correct hai? Everyone. He gifts me the jewelry. He gifts me the jewelry. So it is gift. 1 minute. Now tell me, gift is taxable for which assessee? All assessees. Cash or kind? Both. Kind mein, in the list, do we have jewelry? Yes. But this jewelry was stock in trade, and therefore, is this taxable? Yes! It is stock in trade for him. If he receives, he will show in PGBP. I am not a jeweler. I am a chartered accountant. I am not going to show this under PGBP. For me, it is taxable. Acha, later in the chapter, you will be taught that gift received from relative is exempt. Uncle is in my definition of relative, so it may become exempt because of that reason. But for now, the answer is taxable because you have to see the receiver. One big mistake which I see a lot of students making, they are not analyzing the transaction properly. You have to understand in gift transaction, there is a giver, there is a receiver. There are two parties. IFOS is for the receiver. So you have to imagine the transaction as the receiver being the assessee. Receiver is paying tax, no, giver is just giving. Receiver, for the receiver, if it is capital asset, it will be taxable. But if the giver ka it is stock in trade, you don't have to check that. You understood? First game that I see I will play. Fantastic. Second game. Mr. X is a grocery shop owner. So one thing is clear, that none of them is a stock in trade. They give the nature of business like this in the question. He is a grocery shop dealer. He is in the business of selling food grains. To make it clear that this asset is not stock. He has received the following assets. He has received the following assets as gift. You have to decide whether it is taxable. Jewelry. A personal movable. Personal movable. But it is exception. So is that capital asset? Yes. And he is in food grains. So not in stock. Is it taxable? Yes. Very good. He received shares as gift. That same food grain dealer. Is it taxable? Yes, because it is capital asset. He received residential house as gift. Is it taxable? Yes, it is taxable. He received rural agricultural land as gift. Is it taxable? No. Why? Not a capital asset. See, the reason behind writing capital asset here was what? To remove stock. But there are some assets which are neither stock nor capital asset. For example, food grain seller, rural agricultural land is not stock. But so be it, it is not also your capital asset. And therefore, let's make one more thing clear, that any asset that is not capital asset, any asset that is not capital asset, example, rural agricultural land, will not be taxable. Ignoring the fact whether it is your stock or not. Logic was to remove stock, but the law says capital asset. So if it is not capital asset, it is going to be taxable. Understood? ICAI and its games. So what are the conditions to tax gift? Condition 1. Condition 2. Condition 3. Selected list. And condition 4. That also it has to be capital asset for the receiver, because the receiver is the assessee. Ye correct hai? Fantastic. Conditions are not over as yet. Next. Even when all the above conditions are fulfilled, in the following cases, gift will be fully exempt. Means, if you get a question on these situations, you don't even check the other things. Simply say, not taxable. Following cases, gift will be exempt. You are in all assessees. It can be monetary or non-monetary. It is a part of the list. It is your capital asset. To hell with all this. Not taxable. Fully exempt. That means for me to pay tax on gift, first these 4 conditions have to be fulfilled, and then I should not fall in this. Because if I fall in this, then my gift will be fully exempt. Everyone is with me? What are the cases? One by one. Lots of cases here. And numbering ka be very careful. A, B, C, D, E are points under gift. 1, 2, 3 are points under point E, which are giving us list of exemptions. There will be further sub-numbering here. Lots of confusion as far as numbering. Be very careful. Following cases, gifts will be fully exempt. Any gift that you receive from your relative will be fully exempt. Any gift received from relative will be fully exempt. If your relative gives you gift, you don't have to pay tax. Even if it is one of the assets, even if it is capital asset, relative is giving gift, you do not have to pay tax on that gift. So I want to ask you, if the point is over here, okay, your relative is giving you gift, is that taxable or exempt? Exempt. Your relative is giving you gift without any occasion, then taxable or exempt? Exempt. And due to an occasion? Exempt. It is your birthday and you are getting gift though? Exempt. It is your wedding and you are getting exempt? It is your wedding and you are getting gift, sorry. You are not getting exempt, you are rather getting trapped. It is your wedding and you are getting gift though? Exempt. It is your neighbor's wedding and you are sad because you also wanted to. So, relative is giving you. Giver is your relative. I am defining occasions. Neighbor is giving, neighbor is not giving, relative is giving, relative is giving on neighbor's wedding because you are sad, because you also intended to. Giver is relative now. Then to hell with the occasion. If relative is giving, gift will remain exempt. Your relative is alive and giving you the gift, is dying and giving under inheritance. If the giver is relative, don't kill unnecessarily. Living relative also fully exempt. Living relative also fully exempt. Any gift received from relative will be fully exempt. On which occasion? All occasions. Any occasion. Yes or no? Ask a question. Ask a question. Who is relative? Because you have to understand the relative as they have decided, not the ones whom you consider. Only the ones which they have decided are relatives. You consider someone your relative is not relative. So we have to define who that relative is, because from that person if you get gift, it is going to be exempt. But before I tell you the definition of relative, I have to tell you something funny that is going to happen. You know, you will be having two people, A and B. Is it possible A is giving gift to B, B is giving gift to A? If A is giving gift to B, so B is the assessee. So we have to see, is A my relative? Supposingly we check the list, we find A to be the relative, therefore it is exempt, irrespective of occasion. But in the same case, it is possible that when A received from B, B is not relative, and therefore it is taxable. You will get to see this stupidity in the chapter here, where one person is relative of the other, and the other is not relative of the first person. Just because I am your relative does not mean you are my relative. I am your relative, so your gift is exempt. You are not my relative, so my gift is taxable. So what is the solution? One thing is for sure, it is not a two-way relation. This is one-sided. This is one-sided. So you have to keep your receiver in mind. Sir, why am I keeping my receiver in mind? Because the receiver is the assessee. For the receiver, we have to decide whether the gift is taxable or no. And his definition of relative, you have to check whether the giver is falling in that list. For the giver, the receiver may or may not be relative. We have to check for the receiver, is the giver falling in the definition of relative, and you won't get a two-way connection here. And you are used to it also, so it is not difficult for you to understand. Correct or no? Let us define what is relative. Relative has been defined only for two assessees out of 7 persons liable to pay tax. Relative ka definition is given only for two assessees. You want to guess? Individual and HUF. Company, firm, AOP do not have relatives. So this first point, exemption shall apply only to individual HUF, because relative is only for individual HUF. HUF is very easy. It is one line. So I will finish in one line. So you understand, we are doing E1A. E is fifth point of gift, exemptions. In that we are learning first point, relative. And we are defining A for HUF, B for individual who is relative, because for other assessees there is no relative. And in one line they finish this. Any member of relative, any member of HUF is going to be considered as relative. Whenever any member of HUF gives gift to HUF, it is going to be relative, and therefore for the HUF it is going to be exempt. Sir, what can be the occasion? Any occasion. Birthday party, wedding anniversary, death, betrayal, anything. Member giving gift, it is going to be exempt for the HUF. That means, do you understand? If there is any gift given by member to HUF, for the HUF it is going to be exempt. I have my own HUF. If I give gift to my HUF, for my HUF it is going to be exempt. But then sometimes will it be possible that HUF is giving gift to member? First of all, do you understand that we can't apply only this point? We have to actually go and see that what is the definition of relative if the assessee is individual, because it is this individual who is receiving. I will go and see the list of relative here. If, pay attention please, if in this list I get a point, any HUF where I am member, then HUF will also become my relative. It will become exempt, but it is not there. Let me tell you in advance. In my definition of relative, there is no point called my HUF. That means, is my HUF relative? No, not relative. And because it is not relative, this gift is going to be taxable. Is that weird thing which I was telling you before I started definition of it. It is possible that A is relative of B, but B is not relative for A. If member is giving gift to HUF, is it relative? Yes. So taxable or exempt? Simple. Relative yes, then exempt. Relative no, then taxable. If HUF is giving gift to member, is it relative? No. So taxable? Yes. You understood? Member to HUF, exempt. But HUF to member, taxable. So who is relative for HUF? Any member. Very easy. One line. It gets over here only. See, individual has too many relations. In the definition of relative, individual has too many relations. But HUF is one artificial person who has family members, and the members are going to be considered as. We are doing point E. Point E means gifts which will be fully exempt. First point in that is relative. On what occasion is that exempt? Any occasion. Irrespective of occasion, it is always going to be fully exempt. For HUF, who is relative? All members. But that does not mean that for the member HUF is relative. I already told you it is not there. Now then we have to go and see for individuals. If you and me receive any gift, if we receive from our relative, it will be exempt. On what occasion? Any occasion we receive gift from relative, it is going to be exempt. So we have to find out who are those relatives. The ones whom you consider your relative are not relative. The ones which are written here are your relative. Shall we? Definition of, you just have to tell me if I am doing with you 1, 2, 3, 4, 5. It is exactly what 1, 2, 3, 4, 5, 6. Because I don't want confusion. This is E1, B1. E1, barabar. E1, B1. E was fifth point of gift. In that 1 is exempt. In that B for relative. Sorry. E was exempt gift. 1 was relative. E was exempt. 1 was relative. In that B, definition for individual. This is simply put, if you want to keep it simple. If today you are receiving a gift, you are individual. If the giver is your relative, it will become exempt. So who are these people from whom you can take gift? and not pay tax. Take you can from anyone, but you won't pay tax if you are receiving gift from the following. Who are those following people? The first one, and the most obvious of all, spouse. And only my students need this clarification. By the way, I must tell you one more thing. I must tell you, in the Income Tax Act, they have written this spouse of the individual. They also have not written spouse and left it. Okay. If you write spouse, that means anybody's spouse. This is your spouse, not the one whom you consider your spouse, but your spouse. So what do you mean by spouse? Spouse means, I told you, no, what was spouse? No matter how bad it was, still some people find it funny. Hey, ganda tha ganda. What is spouse? Wife or husband? You don't have two options. Depends on who is the receiver. Receiver is individual. Check the gender of the receiver. If the receiver is male, to wife. And if the receiver is female, to husband. Bro, there are other permutations. Legally allowed. We will wear, if you want, we'll wear a band and join you for the protest. We are with you. Okay? We are in full support of you. Spouse. Any gift received from your own spouse is going to be exempt. On what occasion? So your spouse is giving it. Today is which day? CA students. Oh, bro. Like for example, yesterday it was Rose Day. Today is which day? Nahi pata. You gave a rose to your calculator or nahi? Today is what? अरे पूरा वीक होता है ना, तो what is it today? नहीं नहीं, वो चॉकलेट डे है कि टेडी डे है, अगर पूरा 1 week goes on. No idea? No? Let us stick to Saturday. I think it is hug. That's what I'm asking, which day it is today. Oh, Google कर. What are you doing? Check कर. Network issues. Mobile data is very weak in this classroom. We are all on Wi-Fi. Propose day. Bro, तो एक काम कर, pick up the Income Tax Act and propose. The probability of you listening to a yes from the act is still very, very high. Propose. Nothing is going to happen, but propose if you will. So, ladies and gentlemen, your own spouse giving you any gift on Rose Day, Propose Day, Hug Day, Teddy Day, Chocolate Day, Friendship Day, Valentine's Day, Wedding Anniversary Day, Birthday, Yesterday. क्या बोली वो? डेथ डे नहीं, सब हाँ, गुलदस्ता is not in the definition of asset. So stop being foolish. Occasion understood, but the first 4 conditions also have to be fulfilled. Otherwise, if it is not in the list, where is the question of taxability? Correct? Supposingly, Saturday evening, I request my wife for permission to go out with friends. And she grants me the permission, against which I gift one of these things. Irrespective of occasion, gift received from spouse is going to be exempt. Who else will be your relative? No, you don't guess. मैं बोलूं? Because there will be some surprises here. Brother or sister. Again, here I don't have to mention own. Understood? Own. In spouse, we have to be specific. But रुको जरा, सबर करो. Brother or sister. 4 relations will be covered here. Please pay attention. Brother to brother, brother to sister, sister to brother, and sister to sister. All gifts will be exempt. All gifts will be exempt. Your question I will come to some time later. But for now, do you understand? 4 relations are covered. That means you have any gifting between brother, sister, as it is generally the brother only giving gift to sister, whether Raksha Bandhan or Bhav Beej, it is always no. Chalo, let's not sit and discuss. I am also aware of what happens. Okay, so don't guess. No, no, sir, it is not like that. It is always the brother gifting, except if it is my mother's brother. They are different level altogether. Brother or sister of the individual. So any gift received between siblings is going to be fully exempt. These, as funny as it may sound, this will help you in your family planning. So if you have, ancestrally two properties equally belonging to two siblings, one brother, one sister, so you can say, I gift my share of this property, you gift your share. You have to create something called a release deed in favor of each other. Once that release deed is registered with the registrar of properties, so you can separate. It is like I am gifting my share in that property, you gift your share in this property. And gifting between siblings will not be taxable. Do you understand? Next, brother or sister of your spouse. That means my wife is my relative. Her brother gifting me anything, for me it will be exempt because he is also relative. Her sister gifting me anything is also going to be exempt because she is also relative. Brother or sister of spouse. Now, why do I tell you that in this chapter it is always one-way relation, not two-way? Supposingly, myself and my wife's brother. Okay? He is gifting me, so I am the assessee. Is he my relative? So for me the gift will be exempt. But supposingly I give him the gift. So make him the assessee and think about him, please. Am I the giver falling in the definition? Am I his spouse? We have to check. Am I his spouse? No, I am spouse of his sister. Am I his spouse? No. Am I his brother or sister? No. Am I brother or sister of his wife? No. That means I am not his relative. So if I give gift to him, for him it is going to be taxable. So if I don't give, it is understandable. He gives any gift, it is exempt. So he should give or no. But he does not. You understood that it is not a two-way relation. We already saw in HUF. We saw one more case here. But yes, the list is not yet over. Next, brother or sister of your parents. Yes, you heard it right, ladies and gentlemen. Will also fall in the definition of relative. Brother or sister of your parents will also fall in the definition of relative. There are four relations covered. Mother's brother, sister. Father's brother, sister. You understand? Pavli gone is come. You just wait. Okay. Problem is with English. English is a funny language. In English, no. Mother's brother is also uncle. Father's brother is also uncle. Mother's sister's husband, father's sister husband, or anybody randomly walking on the road is uncle. English is a very funny language. We had discussion about it in the past as well. In English, if we want to abuse someone also, no, we roughly struggle and we get only one word. If you really want to abuse someone, you should, come to Hindi, you get variety, or even better, Marathi, where it comes with music. We'll keep a lecture on that. Correct or no? So for a moment, if we talk about these relations in Hindi, so mother's brother and sister are known as Mama and Masi. Father's brother and sister are known as this pagal female said Chacha and Chachi. She has done Rishto ka sarvanash. According to her, Chacha and Chachi are brother and sister. You said Chacha and Chachi. It is not Chachi. It is sister, Bhua. Chacha Chachi are brother sister. Then Chacha Chachi are brother sister. And what? Mama Mami. Bro, listen. Case hoga. What are you talking about? You are spoiling family relations completely. You have made husband, wife, brother, sister. Hey Bhagwan, you know what you are doing. Repeat the four. No, you already said Chacha and Chachi. Neighbor's wife bhi de sakti hai. How does it matter? Definition of relative is what they have given, not what you are presuming. So it is father's brother and sister. That is, in Hindi we call them chacha and bhua. And mother's brother and sister, mama and mami. Mami is not sister. Hey Bhagwan. Mami must be wondering how. नहीं, it's okay. You leave. No, relative है. You check. Is she relative? Not yet. We have not done. We have not finished. She may become relative later, but right now the spouses are not relatives. Incest बोला ना. Do you even know what that word means? When you have a crush on your family member. Bro, you can do whatever. You have all the freedom. You have chosen the corner for that reason only. And you are hiding behind my laptop. Doing activities which are illegal, immoral, unethical. Caught on CCTV. नहीं ठीक है कुछ नहीं you have to study. Please understand. You understood the 4 relations that are covered here? Fantastic. But do you also understand that if my father's younger brother, chacha in Hindi we call him, uncle you can say, if he gives me a gift, is he relative? And for me it will be exempt. But did you notice that if I give him a gift, you observe, am I his spouse? No. Am I his brother, sister? No, I am brother's son. Am I brother or sister of his wife? No. Am I brother or sister of his parents? I am my grandmother's brother or sister. Kya? Yeah. I am brother or sister of his parents? No. That means if I give him gift, for him, it will be taxable. You understood that two-way relation is not happening here? That means uncle is relative, but nephew, niece not relative. You understand this? In all the fun, also notice these things. It is okay to receive gift from your uncle, but it is not okay to give your uncle gift. You understand? Okay, fantastic. Next. Any lineal ascendant or descendant of the individual. Ascendant means the people before you in the family tree. Descendant means the people after you in the family tree, but linear. See, when I say before, after means linear. So before me, father, grandfather, great grandfather, and after me, son and daughter, linear. Grandson, granddaughter, great grandson, great granddaughter. People before you in the family tree, people after you in the family tree. They are all going to be considered as your relative. That means you giving your gift to parents or parents giving you gift, it is all going to be exempt because ascendant, descendant, both are covered. Now, if you want to give gift to uncle giving you gift directly exempt. You want gift to uncle, it is taxable. You want tax planning strategy? Give it to your parents, father, exempt for father, and from the father, gift it to uncle. Brother is also relative. Two gift deeds will have to be. So the legal planning will be required, but then do you understand that don't reveal this in front of family. Don't reveal these secrets. When the time comes to execute and plan, still don't answer their query. Bola, you will not pay any tax, my guarantee. Let me do the planning, I will make the agreements, you just have to sign. Tax is not applicable, is my guarantee. You understood? Lineal ascendant or descendant of the individual, people above you and below you in the family chain will all be considered as your relatives. Next, lineal ascendant or descendant of spouse. Ascendant means the people before. So supposingly my wife, so her ascendants will be my extremely rich father-in-law, grandfather-in-law, ascendants, you understand? So your father, grandfather, great grandfather are your ascendants, and spouse ka father, grandfather, great grandfather are spouse ka ascendants. Whether your ascendants give you gift or your spouse ka ascendants give you gift, both of them are going to be fully exempt. Come on, everyone with me. Now Rushed, is facing one big problem in life. He has massive confusion. Dushyant, I want to make it clear to you. Your descendants means your son and daughter, and your wife ka son and daughter, they are both your relatives. Because your descendants and her descendants are separately given. See, ascendant will definitely be different. So both are relatives, your ascendants and spouse ka ascendant. They are saying, listen, your descendants, that means your children, and your spouse ka descendant, that means her only, her children, your children, her children, both are relatives. Huh? 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 Step children are also relatives. They are not making fun here. They are not doing time pass here. In case you have step children, then spouse ka children are also your relatives. Are you understanding? So any gift received from own children or step children, they all will be considered as children, relative, and therefore kya? Exempt. Are you understanding this? Now later in the syllabus I will teach you definition of child in one of the chapters. For now, if your question is adopted child, yes, adopted child is also considered child, provided legally you adopt her, not that you rob from a hospital or something. You see, her face only looks like वो बच्चे चुराने वाली lady. She takes rounds in hospitals stealing kids. Doesn't she look like one? Observe her carefully. Then you check. Maybe because you are not facing her, you are sitting parallel to her, you can't see her face as much as I can during the lecture. वो exact वो बच्चा चोर she looks. I'm telling you. Check photo front camera. Are you clear? Adopted children, provided it is legal adoption. Everyone is clear? Last point in the definition of relative. Spouses. Wait, huh? Don't react to this. Spouses of 2 to 6. Spouses of all of them are also your multiple spouses, not of yourself, because so many people are covered. So finally her relations. Wait, I'll come to it. I'll explain in detail. Please pay attention. Last point in the definition of relative for individual is spouses of the people above. But when they say people above, they have only said 2 to 6. They have not said 1 to 6. They have said 2 to 6. They have not said. They have said spouses of 2 to 6, not 1 to 6. Sir, why not 1 to 6? I know when I ask, sir, spouse, your reaction is, sir. You think that spouse of spouse is yourself, isn't it? And therefore it is not covered here. But what if I prove to you? Today I will prove it to you that spouse of spouse is not yourself, someone else. Proof to you? No. You are, see, I told you, no, chore, divorce, alimony, everything she has planned. No need to go all the way there. The marriage is in existence. The marriage is in existence. Still, spouse of spouse is someone else. See, your reaction is, sir, obviously spouses of 2 to 6, because 1 to 6 is myself. And if I prove that it is not yourself, proof karu? You want proof? According to you, spouse of spouse is yourself? No, bro. No, bro. I must tell you, for a Muslim male, the relation between first wife and second wife is spouse of spouse. Go check. Think about it. Think about it. If the first wife is gifting anything to the second wife, bro, she has gifted her husband only, so she can gift anything. No. Is that spouse of spouse? But not a relative. And therefore, for the receiver, it is going to be taxable. Taxable. Because spouses of 2 to 6 are covered. But spouse of first one is not covered. So if the first wife is gifting anything to the second wife, that is not falling in the definition of relative, it is going to be taxable. Once upon a time, beginning of my career, I used to, joke, okay, bro, believe me, it is difficult to handle one. How you handle four? I have a discussion on this with you, that it was written that you are capable enough that you can take care of three widows of the community, is how Islam allows for wedding. We discussed that, correct? So you know the logic, you know whatever is written, why it is written. If you don't know the logic, all you can do is make fun. Char, bro, difficult to handle one. How you handle four is funny only because you don't know the logic. The moment you know the logic, everything falls in place. And therefore, I always say nothing is bigger than logic. End of the day, the probability of first wife gifting anything to the second wife is too less. Matlab, big question arises how, what kind of relation they must be sharing with each other, bro, or whether they will be having any relation sharing between them or no. It is only husband sharing, not relation sharing. So will they ever be cordial to each other? What is the probability of gifting? And even if gifted, it is going to be taxable. Husband gifted won't be covered because it is not falling in the definition of asset. Some cases it may be a liability also, bro. So depend karta hai what is being gifted. Is that clear? So I have proven that spouse of spouse need not be yourself. It can be someone else as well. Some people thought about divorce. Divorce hai to it is no longer spouse. Once divorced, it is former spouse, ex spouse, estranged spouse, past spouse. It is not spouse. Clear hai? So then who are covered here? Brother, his wife, sister, and her husband. Now then, if I give gift to my wife's brother, I have also become relative. Till now, I was not relative, only he was relative. Understood? Then, my wife's brother, his wife. My wife's sister, his nahi, her husband. Her husband. My father's brother, in Hindi we call him. In Hindi we call him Chacha. So then Chachi. Mother's brother, Mama, to Mami. Father's sister, Bua, to her husband. Mother's sister, Masi, to her husband. You understand? Lineal ascendant, listen, father, grandfather, relative, no. So your mother is becoming relative in etc. Father is covered here, mother will be covered here. Likewise, father-in-law is covered here, mother-in-law will be covered. Your children are covered here, son and daughter. The son-in-law, daughter-in-law, including spouses of your stepchildren. Grandchildren, of course, any descendant, but even if they are stepchildren, they all are going to be covered here. This, ladies and gentlemen, is your definition of relative. In the big fat Indian family, you observe most people typically go watch a Suraj Barjatia movie. Hum aapke hai kaun, hum saath saath hai. You'll find out that all of them are relatives of each other. And a big question therefore arises, sir, apparently it seems like everyone is relative. Sir, I believe that no one is now left. We believe that everyone is relative. So let me still make it clear, while the definition is so wide that big fat extended Indian family, everyone seems to be relative, there are so many people who are still not your relative. I will explain. For example, your HUF. Don't you think it is not your relative? So you give gift to HUF, it is exempt because you are relative, but HUF is giving gift, it is taxable. Did you observe that? Did you observe? Nephew, niece. That means my uncle gave me gift. For me, it was exempt. But if I give gift to uncle, for him, it will be taxable. Nephew, niece not covered. Cousins. See, when we say brother and sister, it means biological or adopted. Cousins won't be covered. My father has a younger brother. He has one daughter. So my father has two sons. My parents, two sons. And my father's brother has one daughter. So effectively, we are three siblings. In my family, we don't use the word cousin. Cousin word is prohibited. In fact, not just my father's sibling, my grandfather and two of his younger brothers. I call them grandfather number 2 and grandfather number 3. Grandfather's brother. So three grandfathers. First has two sons, second has two sons, third has three sons. Total 7 of them. My father and his 6 brothers. And in the third generation, that is me, myself, my brother, then my uncle's daughter are my grandfather's grandchildren. Second one also has 3, third one has 4. So we are totally 10 grandchildren. I am the eldest among them. We don't say that we are cousins. We are 10 brother sisters. Cousin word is prohibited. We are a joint family of 3 grandfathers. My grandfather passed away at a very early age, but his 2 younger brothers are still surviving. Early 80s, 82, 81, like that they are. 2 younger brothers often. And last 50 years, they eat in the same plate even today. One will not eat unless and until the other is available, and they will eat in the same plate even today. 50 years, I am aware, though I am not yet 50 because I have heard, maybe from childhood. No matter what is your family bond, I many a time say that my mother's family has a lot to learn from my father's family. That income tax will not recognize. So that way, my closest sister is my father's brother's daughter. We were talking about that Raksha Bandhan and Bhau Beej. Point is simple. If she is at home, if she says, bro, I need money, I will have to ask her how much and give. Because if I give my wallet, I hopefully will get my at least wallet, empty wallet. Every time I say I am scared at home, what if I tell you I'm not scared at home? I don't even talk to people at home. 2 reasons. I don't like people at home. It is their house, so I have to stay with them. Reason number 2, I get paid for talking. That is also too less. I don't leave an opportunity. People are scared of me. They avoid talking to me. And they don't realize that I am liking it that way. Thank you for not talking to me once I am at home. If there is one person who can make me do whatever she wants, it is her. With my wallet or with... Bro, one day she just came and said, I will wax your hands. I was like, why? She's like, your tattoos are fading. So I said, okay, do whatever you want. She said, lie down. I was lying down. I had no idea how this works. She put some strip on my, and then she like pulled it very hard. Abbe, bol to. She took my permission. She would have done it without permission. She is a different level altogether. And I have told her that day when we will get married, I am going to be so emotional. So emotional. Once you get married and you go away. You know, I normally don't dance at weddings. But out of emotions as your brother, I am going to dance at your wedding. Gaadi wala aaya ghar se kachra nikal. I am going to dance at you. Out of all the emotions. Yahan wahan sare jahan mein tera. Jija ji oh jija. I planned everything. Whatever be the bond, income tax does not recognize it because we are not biologically born to the same parents. Either legal adoption takes place. My uncle adopts me or my mother adopts her. That's a different thing. Otherwise, income tax does not recognize cousins as... We don't use the word cousin at our house, but income tax considers us as cousins. She has clearly instructed her parents that whenever she will get married, Kanyadan I will be doing. Her parents won't be doing. Income tax does not recognize all that. Does not recognize only. And we are Indian brothers. You know, when your Indian brother as an Indian brother, your sister may be the prettiest female on the planet. Okay? But an Indian brother will always call her so cheap, so ugly, just looking like a cow. We are Indian brothers. What to do? Sab jagah wohi hai na. What to do now? Income tax does not recognize these relations. Supposingly, it is your closest friend, best friend, or these days Gen Z uses what term? Bestest friend. अरे positive, comparative, superlative, this is which lative I don't understand. Best का bestest. हाँ, mother from another brother. Mother from another brother नहीं. That means your generation does not know memes also. You don't know Umar Akmal. अरे वो वो पाकिस्तान का विकेट कीपर कामरान अकमल, his brother Umar Akmal. He actually posted a photo with his friend and he said mother from another brother. And then their team captain Sarfaraz Khan ka another meme. My answer also same, no difference. So you know, closest friend, your buddy, income tax does not recognize it is going to be taxable. You understand? Last example. I just told you about my grandfather's two brothers. Both of them younger than him, still surviving. And as I told you that in the 10 grandchildren, I am the eldest. I am the only one who has a child, matlab fourth generation. Other than me, the remaining 9, only my brother is married. And he still does not have a child as yet. So there is only one, my grandfather eldest, my father eldest, myself eldest, my son the eldest in our respective generation. So my childhood, my mom tells me, I am not aware of the fact. She said when you were a newborn, you were the only child in the family. Because your youngest uncle had also grown up. And in your generation, you were the first. Every morning, your grandfather used to knock the door, take you out, and 3 of them used to sit in a circle and fight with each other who will play more. Every morning there used to be a fight. When you have only one child in the house, it does happen. And the firstborn is always that way the privilege. But as you grow older, the younger ones start getting more and more love. What do I tell you? In typical Indian family. So that is how my family has always been. If these 2 brothers of my grandfather ever get any gift home, they will first bring for me, then their own grandchildren. But taxable hai, because brother or sister of grandparents are not covered. Observe kar, your brother sister relative, your spouse ka brother sister relative, your parents ka brother sister relative, but your grandparents brother sister not relative. Understood? And therefore I say lineal ascendant means it has to be in single line. It can't be next to each other. So it is father, grandfather, great grandfather. Chalo, father's brother sister still covered, but grandfather's brother sister or great grandfather's brother sister not yet covered. Are you clear, everyone? All right, ladies and gentlemen. If I now go to point number होगा sir. Cases of gift being fully exempt. Point E. First was any gift received from relative. Which occasion? And now we know who are relatives. For individual in HUF, remember it is always a one-way relation. Fantastic. Second case of gift being fully exempt. That one occasion of your life when even income tax has sympathy with you, on the occasion of marriage of individual. I said that one occasion of life when even income tax has sympathy with you. But bro, if you are legally allowed, it can be more than one also. In case, let's not have a debate or dispute about it. So unless and until India superimposes uniform civil code, couple of states in the country have already imposed. Like for example, Uttarakhand has become the first state in the country to impose uniform civil code. Talks are going on. Goa is following Portuguese civil code. UCC nahi hai bro. Half knowledge is worse than no knowledge. Gujarat there are proposals. So as of now, every religion has separate rules of marriage and divorce. So one occasion or multiple occasion, I say it from my perspective, because one occasion when even income tax has sympathy with you, on the occasion of marriage of individual. Is that correct? Coming to that. Pura detail mein I will explain. Don't worry. I know you are so overexcited about relations, marriage, sir. When was the last time you had so many doubts in one class? I will come to the occasion later. First, let me clarify to you that this can be received from any person. Please understand. If your relative is giving you gift, whether marriage or any other occasion, is it exempt? So if the giver is relative, don't take such a big risk. No? Without this also it is exempt. But when a non-relative is giving you gift, friend is giving you gift, these people are giving you gift, is your gift taxable? Is your gift taxable? Taxable? Taxable. But if the occasion is this, then it won't be taxable. So now whatever explanation I will give you, remember one thing, the giver is not your relative. In all the examples or explanations, giver is not relative. If the giver was relative, we don't have to come to the second point. We are done in the first point itself. Correct or no? Giver is not relative. So imagine your friend is giving you gift. Friend. We have to discuss whether it is exempt. Marriage of individual. HUF can't get married. No, bro. In lineal descendant of spouse also, it appeared funny, but you realize they have some logic that is captured. Here also there is logic. If you understand logic, then nothing like that. Everyone with me? Fantastic. So, supposingly, Rushed, May 2025 CA Inter. If you work according to plans of your teacher, not as per your plans. If you work as per teacher ka plans, so May 28 will be your final. In July 2028, you will be CA Rushed. What surname you use? अरे यार इतना थोड़ा इजी कार्ड नहीं रख सकता था. You say it starts or O say? Rushed you. Okay. These are worthless once you have this in front of you. The value of this, this your parents gave, this your ancestors gave, this will be your contribution in that name. July 2028. Imagine that day, all of you. Your name is no longer your name. Your name has an addition of 2 alphabets for the rest of your life. Wherever your name will be written, it will be with these. Because other people have to use Mr., Mrs., me. No. People will refer to you using these terms, these alphabets. And Rushed, July 2028, by the time your result comes, between May and July, there is time gap. No? So during that period, your family has decided to auction. Auction only, no. We are Indians. So, and Indian families, how it works. First of all, when you give CA final, they assume you are going to pass. Bro, even in CA final, they assume you are going to pass. And they start preparing for auction. One day your result comes, they have to wait for the result because positive result means the auction will fetch a better price. So the moment you have CA Rushed, not just Rushed, but CA Rushed, so the bidding will be very high and 1, 2, 3 sold, start at the strike of the hammer. So July 2028, you get married Rushed. Correct? Eh? You will obviously be present in that marriage. I said obviously you will be present. Your parents will be a part of that ceremony. Yes. Your friends will be invited. Yes. Your parents' friends will be invited. Yes. In your marriage, your parents are getting gift from their friends. See, their friends don't know you, useless fellow. Why should they give you gift? Who are their friends? You are not their friends. Who is their friend? Your parents. So they are giving gift not to you. They are giving gift to your parents, your family members. That will be taxable because the exemption is only for the person who is getting married. Are you understanding this? That is why individual. Not that HUF gets married. We know that HUF does not get married. And company, of course, it amalgamates. It does not get married. The person getting married should be the person getting gift. No, bro. You are getting married, so your gift is exempt. You can't be saying, sir, there was a wedding in my building. There was a wedding in my colony. Or say, sir, there was a wedding in my country. And every morning we used to take oath, India is my country. All Indians are my. I love my country and I am proud of its rich and varied heritage. I shall always strive to be worthy of it. I shall make my parents teachers. Well, that second line, we used to stop. All boys school. Second line, we always took a pause. And some good ones there were some good ones in the all boys school also. All Indians are my brothers and sisters except one. And we did not want to limit ourselves. So we used to mute that sentence only. Never spoke that sentence. Toughest times were school pledge when it used to be in the school assembly. So one of us used to be appointed to speak that pledge on the mic in front of the whole school. How do you go? In the silent mode. So I used to always say that, see, pledge has to be only spoken. After pledge, we will have national anthem before the assembly is over and we go to our respective classes. Allow me to sing. I may do that better. So I will do Janagana Mana and tell the pledge. Let someone else take the pledge on behalf of the. You have to be smart at all times. Okay. As I have multiple times told you that you have to learn a lot from me other than tax. Also, I get paid only for tax, and that is also. Yes. We'll keep a separate batch. Are you clear that a wedding in your family, building, society, country is not going to be an occasion for your exemption? Well, you can't say that my neighbor was getting married, I was sad, so everyone gave me gift on the occasion of marriage. You have to be the one getting married for the exemption. Is that clear? Fantastic. Rushad, your story will continue. Yes. Today marega, because this is only the second point. Rushad, July 2028 is your wedding. Obviously, if it is your wedding, then the gifts received by you will be taxable because you are the one getting married. Hello? Everyone with me? Fantastic. 1 year from there, calendar note karta hu, July 2029, you have two celebrations. Celebration 1, first wedding anniversary. Celebration 2, your first child. Double set. So July 2029, CA Rushad, father Rushad, and first wedding anniversary. Again a grand celebration. Everyone is invited to celebrate. Okay, your first anniversary. Lots and lots of people are giving you the gift on the occasion of that anniversary. And it is your anniversary only. Taxable or exempt? Taxable. Taxable. And what about the child? The child ka gifts also taxable. In fact, clubbing will apply because minor child, and that also you will only have to pay. Clubbing will study next chapter after this. July 2029. Understood? Fantastic. Story is not over. Now it will continue. 1 year from there, July 2030. Again double celebration. Your second anniversary and your child ka first birthday. First birthday of your child. So again you have conducted a grand party. Everyone is invited. Lots and lots of people got gifts for your non-relative. Therefore, relative is already covered in point 1. I am talking about non-relative. Lots and lots of people got gifts for your child. Child ka first birthday. Taxable or exempt? Sorry, child. Taxable. Very cute, not like the father. Taxable or exempt? Kaun tha wo? Mother. I need someone who is so spontaneous. See, understand. If I tell you that the child is really very cute and not like the father, if you had the smartness or presence of mind, you should have immediately said, so what, sir, like the mother? So what if I am not smart? Child will resemble the smart mother that I will choose now after qualification. But you don't have that. I know his current condition is, sir, opposite gender and alive is my only criteria. Smart, not smart is not even the criteria. School mein they had taught about starvation. Nothing is going to happen, bro. But I must tell you one more thing. Become a successful chartered accountant and then you will be spoiled for choices. Did I tell you that your bidding will fetch a higher price? So let's continue the story. First birthday of child. All the gifts taxable. And of course, clubbing will apply. You will have to pay tax. Clear hai? Fantastic. Story will take a jump. A big jump. How many years of your wedding now? 2 years. In 2030. From here we take a jump. 23 years later. In the year 2053. Year 2053. You are completing 24 years, 25 years of your marriage. And 24th birthday of your child. 2053. There is an assumption in this story. She is still tolerating him. Story is based on the assumption that she is still tolerating him. Of course, it is, unreasonable assumption. But to continue the story, we have to take it. So 2053, 25th wedding anniversary, silver jubilee as they call it. The children are overexcited. You know, believe me, I see a lot of kids these days. Oh, my parents got 25th wedding anniversary. It does not come again and again. Bro, 26th also comes once only. Check. 24th also comes once only. Nothing comes again and again. It won't come again. So nothing will come again. So kids these days have gone crazy, believe. They're like literally they are like, listen, mom, dad, that time no, we did not see how it happened. So we want to see it again. So they like literally organize the entire wedding ritual. Proper ritual. So believe me, recently my third grandfather, matlab the youngest of the brothers, his 50th wedding anniversary was there last July. And his children, my uncles, who at that time, you know, once upon a time, the family literally was struggling for food also. But today they have all the resources available. They have done really well in their respective careers. So they organized a grand function. If I'm not exaggerating, his children have sufficiently spent more than 1 crore on that celebration of the 50th wedding anniversary. Like proper haldi, mehndi, India's best singer was called for conducting the Sangeet Wala event. And these days, the kids, I have seen that they call a priest at home, they light a fire and then they make their parents take the circles also around the fire. By the way, the Bollywood has suddenly imposed, you know, unfair manner in our mind that you have to take 7 circles. It is not 7, we take 4. I don't know what happens in different cultures. No, हम लोग में तो 4 ही होता है. It is 4 only. I took, so I. First 3 में the groom has to be ahead, and then the priest tells the bride that by chance if he is ever in trouble in life, so you have to promise him that I will take the responsibility, and in times of trouble I will go ahead. And therefore in the 4th circle, the bride is ahead of the groom, and at the end of the 4th circle, the priest says, done. Okay. More planning about marriage and clubbing of income related, etc. We have a lot more coming up in the next chapter. Lots and lots of exciting stuff coming up. But for the time being, the point is simple. Rushet, is still tolerating you. And in the 25th celebration, like proper wedding rituals by calling that Qazi. And again, you said Kabul hai, Kabul hai, Kabul hai. She didn't want to say it also. But she is like, you know, under peer pressure. Okay, chalo, Kabul hai. 3 बार बोलते. How many times they make you say Kabul hai? नहीं बोलते. यू सुन्नीज में बोलते. किसमें? अच्छा, इसमें भी मल्टीपल सेक्स आते. तो आप लोग में कैसे करते? You all say thrice. What do you? But कबूल है, they say no. तो what do they say? मैं आपके बदले में निकाह पढ़ूं तो बिस्मिल्लाह. अच्छा, मतलब you have to say something to still give approval. In under Hinduism, Jainism, the priest does not ask. You are sitting, मतलब it is assumed that you are saying yes. If by chance they would have asked once, no, okay, sure है क्या? I would have said, sir, time please, थोड़ा सा time मिलेगा क्या? समझो सर, वो पढ़ रहे हैं, वो जो भी पढ़ रहे हैं ना, मतलब वो उसमें जो पढ़ने का है, वो ऐसा हो जाएगा कि वो खुद का पढ़ रहा है, मतलब he is खुद का निकाह पढ़ रहा है. हाँ, मतलब खुद का हो गया, ऐसा हो जाएगा. इसलिए जो है ना, उसका Bro, just imagine if without permission he does it, so he will go home with your bride, bro. Then you have to go up. क्या होता है? Bro, but I really appreciate the priest actually taking your approval that are you okay with the wedding, because if they start this in our weddings, no, believe me, 9 out of 10 grooms will say, नहीं भाई, नहीं अभी थोड़ा सा time please. हाँ, तो that is why I am saying 9 out of 10 weddings. मतलब इसमें एक और एक चीज भी है, बच्चे मतलब कोई लड़की है. We'll keep a lecture on that. Pro pressurize. So she shouldn't come there only. Pressure में she came there. And ना बोल के she is going to father mother will take him. Good. यहाँ पे you said no good. हाँ. अच्छा, in front of them, if you say no, then what if after they take you home and hit you? तो वो कमेटी फिर है ना, वो लड़की को लेके जाके वो कोई ऑर्फनेज ऐसा डोनेट कर देते, मतलब नहीं डोनेट. अच्छा, that way. Oh. What is that संस्था called? गुजराती में बोलते हैं तो say the I understand multiple languages. Okay, ठीक है. We will keep a separate session, separate lecture on how weddings happen in different religions. We have a better thing to do in life. So, ladies and gentlemen, you understand 25th wedding anniversary, proper rituals performed. Now again, there will be gifts. This time it will be all rituals are performed. Second marriage है, remarriage है. ये पागल, it is not marriage. Any other occasion, example, birthday party, anniversary, etc., are all excluded. That means all these occasions the gift received will be taxable. I'll give you a tax planning idea. Really want the idea? Get married, all gifts exempt. Take divorce. Again get married. This is a legally allowed marriage. Marriage has to be legal. All gifts will be again exempt. But there is a risk attached. A slight risk. I'll tell you. Dekho. Dushad, you should not be taking that risk. I'll tell you. I'll explain how. Supposingly, you get married. At that time, all the gifts will be exempt. You get divorced. So, under separation, you will have to give some wealth to your spouse for separation purposes. Alimony. Correct? Hai? So, internally, you all have understood with each other that we are doing on paper separation in the court. I'll give you a share of my wealth. I'll take my share of the wealth. And then after some time, we will again get married. Again, we will get all the gifts. It is going to be exempt. Correct? Hai? But after taking alimony and having the legal papers of separation with you, when it comes to that again wala marriage, she didn't come only that day, bro. That day she said, Kabul nahi hai. She didn't come only. And then whatever wealth she had, she was donated to that sanstha which you were saying. She didn't come. So that alimony ka, the whole planning will go down the drain, bro. So the only risk associated with again getting married is this. Okay. And you know, you all see him on a daily basis in so many months. You also know he is not trustworthy. So do you realize that she won't agree only for this settlement? Because she knows that if I on paper do a divorce, even if he gives me alimony, right now he's saying that we will again get married for taxability, for exemption purposes. But then once the papers are done, then you are free for option. So we know it is Rushad. No one else is going to say yes to him. But then the wife does not trust him. She knows that he will go out of her control. So she may not agree on this arrangement. You know, taxation planning is one part, and your spouse agreeing or not agreeing to this planning is another part. And agreeing and taking away your wealth is also a risk. Only when both of you all have 100% trust on each other, then you can probably go for this. Believe me, ladies and gentlemen, a lot of weddings and divorces in the corporate world, in the Bollywood world, in the celeb world, only take place for all this. On one hand, you as fans are wondering, poor guy got divorced, his wife did this. You have these cricketers, these Bollywood guys in your mind, oh, poor guy. Most of them are arranged marriage. Not that the family has arranged, but a planned and arranged marriage. A lot of these celebrity marriages are tax planning strategies. In my wedding, middle class boy in 2014, I showed wedding gift of 20 lakh rupees to convert money from cash to check. So just imagine a Bollywood celebrity or a cricketer getting married and how much amount he must be showing as wedding gift and later divorce and a part of it give as alimony. Contract, there are agents who bring those females for discussion table. There are, we call them power agents. They conduct those meetings. Bola, on my trust basis, right now you get married and after divorce, this much we will commitment, this much you will have to take and leave peacefully. Now, there are some who agree and some who after the marriage is done, refuse to leave. Because they legally have right over your full wealth, that way if you understand. Then sometimes you see Bollywood ka celebrities adopting kids. It is adopted kid but looks like the actor himself. How does an adopted kid look like you? How can an adopted kid look like you? Because there was some power planning, tax planning arrangement here. You and me are too small. You're also learning it for the first time in your life. They are doing it on a daily basis. You have got no idea about the crores of rupees ka tax that is manipulated by doing such arrangements. Just that your power broker has to be a really, really smart guy. The contact that he has brought should be honest. There is no paper commitment that yes, I will get divorced after some time. You can't do a contract like that. That oral contract, you should be trustworthy. Some get married only for that tax planning part. If you go into the depth of it, the discussion is endless. So for now, let's focus on Rushad. Rushad, get married, take exemption. For again, you want exemption? Get divorced and get married again. But then this is difficult for Rushad for the simple reason is that he will get divorced easily. Getting married again, same won't accept because she knows him, and new ka probability is also too less. Rushad है after. तो अभी तक नहीं है ना CA. Become CA, no first. Then probability will increase. That is my guarantee to you. Then I will also give references without any 194H. But become able enough, become worthy of somebody's recommendation. No, if I tell you that recommend my recorded lectures to someone who is not happy with his or her tax coaching, somewhere at the back of my mind, know that I am worthy of recommendation. Become that. No, you are saying CA, but abhi to nahi. Become. I guarantee that I will recommend, provided you are still in touch with me by that times. For example, she is not going to be in touch with me. For example, you may be in touch with me till your final. These days, kids, once upon a time, I used to feel that, yaar, my kids are like family members, students are like me. Anything other than your study also, I'm always going to be available for you. But kids these days don't think like that. Kids, the mentality has changed. You finish your batch, you take your money, you go home. The money is also too less. You go home, we go home. You, who you. So believe me, thousands have come and gone. I'm so very happy in my life. And after a couple of bad experiences, I made a rule. No friendship, no kuch nahi. My job come, finish. If you are cordial, I am very good. If you smile, I also smile. If you turn, you meet, suddenly you see me across a road and you change the path and go to get lost. To hell with you. Who you? Like you don't understand. 50,000 have come and gone. How will it affect me if you will turn your face away? And what bad I have done to you? Bro, I have completed your syllabus at such a low payment. So I have got zero expectation from kids these days. Like that. Usually I used to once upon a time say in my last lecture, guys, let's stay in touch. Bro, don't stay in touch. But just clear the exam, be happy. I am also happy. Ho gaya khatam. As simple as that. No emotion, no friendship, nothing. And I believe kids these days also prefer it that way. So I don't know whether you and me are going to be in touch. If you are in touch, I will be more than happy. But if you don't want to, I am not in need, but let me be clear about it. If we are in touch after you becoming CA, that also with a good result, I have already taken guarantee of your job with a guaranteed salary. Now you may say probably that if you are still in touch with me, recommendations, abhi uske liye you will have to be a little open. Because if you'll say, no sir, my religion, usme bhi, now you told me there are subdivisions. So where will I go and find? I also don't run a parallel marriage bureau. So I think he is so open only, but other party has to be open. That is more important. वो करेंगे बात. जो गांव में रहता है, वो लोग 12 के बाद सगाई हो जाता है. तो आपका हो गया? नहीं, you are talking about your village. After 12, people get engaged. In our village, bro, when they are in the second or third standard, they get married. Arey bro, you are talking about your village now. We belong to Rajasthan, bro. Kids get married over there. So now I did not get married because I also used to stay. So I am aware of these things. Legally, they are not allowed, no. Abhi kaam dhanda mein focus kare. So you understood? I have answered your doubt. First thing when I wrote this statement, he asked me, sir, anniversary. Arey bro, any occasion other than marriage, it will be taxable. And in marriage also, you should be getting the gift and you should be the person getting merit, then it will be exempt. From whom? Anyone. So relative, any occasion. Hello. Relative, any occasion, and non-relative on the occasion of marriage. Everyone is clear? Fantastic. Next, any gift that you receive due to death, due to somebody's will, due to inheritance, any kind of inheritance. That is why inheritance we apply cost to the previous one, because the gift is not taxable. Any kind of inheritance, fully exempt. Anything received due to death, will, inheritance is going to be fully exempt. Again, I hope I don't have to again write this again and again, that we are talking about non-relative. See, if your relative is giving you gift, why are you killing? A live relative also exempt only, no? But if a non-relative at the time of death writes your name in the will, for example, Sir Ratan Tata has wrote somebody's name, and there last 2-3 days it is in the news that 500 crore rupees worth of his wealth he has. Some Mohan Datta, and no one was aware of his name also. Like he was partners in one of his companies once upon a time. He has left behind a big share of his wealth. Not relative, no? Still exempt. See, relative, the living relative also exempt, no? But non-relative, if he leaves behind anything for you under death, will, inheritance, one very big thing you learn for your practical life purposes also, ladies and gentlemen, when you inherit anything from anyone, it is not taxable. It is not taxable. So supposingly, Rusha, today you are sitting to this position, that this first place is a very dangerous place to sit in my class, because whoever sits in this place is the first person who comes to my eyes always. He is always going to be the target, always going to be the target. So who told you to come and sit? क्या कुछ नहीं. Rushed has an uncle, neighbor uncle. Uncle is, very old, maybe in his 80s or 90s, does not have a family, but has lots of wealth, lots of properties, shares, gold, etc. But problem is that at that age, properties, shares, wealth, etc. is of no use, because he needs daily someone to take care of his food requirements, etc. So Rushed takes care of that uncle. Old uncle. Why does Rushed take care of that uncle? 1, his income. 2, his dincome. Dincome, less number of days, dincome, income. Oh, tube light, income, dincome. Uncle then finally makes a will. Rushed, after I die, everything will go to you. So that day only Rushed went at night. He was waiting for that. And now can I say he will inherit all the wealth of that uncle? Fully exempt. Fully exempt. Understand? But don't get caught, Rushed. Any gift received due to death, will, inheritance is going to be fully exempt, irrespective of person. Next. Anything that you receive as purchase consideration during amalgamation or demerger. Will be fully exempt. Purchase consideration during amalgamation or demerger. Fully exempt. Sir, some assessing officers were harassing taxpayers. How? Whenever your company is amalgamating, so old company share will become waste, and for that you will get new company shares. Capital gain will come at the time of sale of new company shares. Correct? Right now there is no gain because the value of the shares is same as the value lost. Same thing happens in demerger. One company ka share ka value reduces, so you get shares in the resulting company. Are you getting these shares free of cost? So assessing officers wanted tax on it. Bola free shares, gift received, IFOs. Then assessee is explaining, sir, it appears that I have got free shares, But ultimately, this is a compensation for loss in value. It is not actually free. He's like, have you paid any consideration for this? No, to pay tax. Because of this harassment, can you believe government actually had to clarify by adding this point that purchase consideration during amalgamation or demerger will not be taxable gift even if those shares are received free of cost, because they are coming as a compensation for loss in value in the old company, and therefore it will not be taxable. Understood, everyone? Next, if a charitable trust or any gift that you have received from a charitable trust or from an educational or medical institution, simple logic in humanity, charitable trust gives monetary help to a lot of people. Educational trust, supposingly good bright student but does not have funds, so can I say that trust will help you with education? Likewise, medical trust, some patient does not have funds for treatment, so there are medical institutions that will help you with your treatment money. Are you getting that money without any consideration? That way, if you observe, all conditions are fulfilled. All assessees, monetary gift, not from relative, not on the occasion of marriage. But do you realize there is some humanity involved behind charitable trust helping people? And therefore, it will not be taxable. Anything that you receive from trusts will not be taxable. But if receiver is one of the following people, who? The founder of the trust. We call him author. Also, I'll tell you the reason. There is a trust deed, like we have memorandum of association or partnership deed. No? He has written that trust deed. Founder hai na? So we can also call him author of the trust deed. If you are a manager in trusts, basically the manager is nothing but the trustee. Or if you are a big donor, substantial contributor ka definition is anybody who has donated more than rupees 50,000 to the trust. Or if you are relative of the above. Then the gift will be taxable, you won't get exemption. This is misuse prevention. Please understand. Charitable trusts are eligible for tax benefit because they are helping general public. If you start helping your founders, your trustees, your donors itself, or their relatives, that means you are not helping general public. So that will be taxable. See how I can manipulate. I give donation to a charitable trust and take tax benefit of this. And that charitable trust gives my son money by calling it educational assistance, despite the fact that my son does not need it. And my son does not have to pay tax because trust is giving. So I am also taking tax benefit and reversing the money and bringing back home. My son is not paying tax. If the receiver is any of these people, then it is going to be taxable. Means if a charitable trust is genuinely helping an outsider, it will be exempt. But if the charitable trust is helping an insider, it is going to be taxable. Understood? Makes sense? Logical sense also? Fantastic. Next, we've seen this before. Reimbursement of COVID-19 related expense. COVID-19 expense nahi, COVID-19 related illness or related illness expense you write so that there won't be any confusion. From any person. Salary may we discuss this. Now, see, supposingly you suffer from COVID or any of the after effects of COVID. So there will be expense. That expense your boss is giving you. So it was a part of salary. We made it exempt under salary. But is it possible someone else, someone outsider other than your employer is helping you? You incur COVID-19 related expense and your neighbor helped you with that money. Possible hai? So this amount can't go under salary. This amount will come under IFOS. So we are exempting this under IFOS. Think about it. I have incurred COVID related expenses. Pocket se money has gone. Now somebody is giving me reimbursement. If that amount would have been taxable, then employer reimbursement is taxable under salary. and other people reimbursement is taxable under other sources. But because we want to exempt it, so employer ka reimbursement we have exempted under salary and other people ka reimbursement we have exempted under IFRS. To make it clear that anybody giving you any reimbursement relating to COVID, it is going to be fully exempt. Anybody giving you any reimbursement relating to COVID expense, it is going to be fully exempt, but only if this illness is suffered by yourself or your family, then only you get exemption. Only if the illness is suffered by yourself or your family. If you are unwell, if your family member is unwell and you have incurred expense and that expense has been reimbursed, so it is going to be exempt. Sir, the definition of relative here was very big. Relative to covered everyone, father's brother, sister, mother's brother, sister. But do you realize your father's brother or mother's brother or their spouses, you won't be taking to hospital in COVID. No, it is their family's responsibility. So this is your family, and this definition of family is very small compared to that relative. This is very simple. This family is same as we studied in 10.5. Spouse and children always, parents and siblings if dependent, and here that children wala Akash ka story took place. Maximum 2 you can have, correct or no, Akash? No, Akash. You can have how many? Infinite. That is family. So just imagine, you are unwell, COVID related, you are unwell, spouse unwell, siblings or parents if dependent, or children unwell. They undergo treatment, you spend that money, and now somebody is giving you reimbursement. Are you getting free money from someone? But still it is going to be exempt because it was related to COVID-19. Understood? So employer is giving, so we have exempted under salary. Other people giving, so we are exempting under hello IFRS. Next, if there is 7th point of what, bro? Fully exempt. Last 2 points, which will complete point E, fully exempt, with which we will complete introduction of gift. Gift nahi. Death due to COVID-19 related illness. Possible hai. And now you are getting compensation. Who will get? Bro, see, you are unwell, reimbursement you can get, but you have died, so you can't get compensation. You must, na? I die and then I get compensation. No. Who will get compensation? Which family? Same family. If you will die, compensation will go to spouse, children, parents or siblings if they are dependent. Compensation can't go to that relative ka definition. No, mama, mommy can't get compensation because you have died. You are not so precious to them. No? Hello. So you have died, compensation will be received by your immediate family. This compensation can come from whom? From the employer of deceased. Sir, I have a very important question for you. Sir, employer, then we should talk about it in salary. No, why we are talking about it in IFRS? Like, reimbursement can come from employer. So that we discussed in salary. Other people we are discussing here. No? So then this also, we are segregating into employer and any person. Employer should have come under salary. Why we are talking about employer here? Other person coming here, understandable. Because employee is not getting, employee has died. The recipient is family member. No employer-employee relationship. If it was taxable, it would have been taxable under IFRS only. So exemption we are giving under IFRS. Employee is not getting compensation. Employee has died. Who is getting compensation? Family member. From employer, you receive any amount, it will be exempt. And from other person, you receive up to rupees 10 lakh, it will be exempt. Beyond 10 lakh, it will be taxable. Exempt only if up to 10 lakh. A person has died due to COVID-19 related illness. Compensation is received by family member. From whom? Employer gives any amount, it will be fully exempt. Another person gives any amount, then up to 10 lakh it will be exempt, provided this compensation is received within 12 months of death. When was the last time you heard someone dying due to COVID? In the last 12 months, did you? No. So they will have to bring one more wave for this. Starting में people took COVID seriously, bro. After a point, people is like, रोज का है. I still remember that day. In the middle of my batch from Kerala, I had to return because Kerala was the first state in the country to impose a lockdown. 5th March 2020. 15 days ka batch. I was on my 6th day. 5th March, 10th March, 5th, 6th, 7th, 8th, 9th, 10th. So I was on the 6th. The 5th was starting date. 10th March 2020. 6 days over. Afternoon mein must I am having lunch. And our audit and law faculty here, my very good friend, 12 से 4 तक, he was teaching law in a competing class. 2 coaching classes, main competitors in Kerala, and we 2 good friends working for different classes. He was for his law batch, I was for my DT batch, and he called me. बोला कि they have, our class has shut down everything क्योंकि chief minister has imposed the lockdown. I said, our class is not, your class does not want to work. Our class is working. I am eating lunch. 200 students are sitting. They are also eating lunch. Lunch break about to get over. I am resuming class. I just hang up. I just keep the phone aside. And the director of our class also calls. Sir, batch to be cancelled, sir. I said, why? Well, lockdown, sir. Gathering of 50 people prohibited. It was new to us. Bro, 50 people prohibited. He said, sir, except hospitals, 50 people not allowed to gather at one place. Cinema halls, coaching classes, everything else is getting shut down. Then we told the students, Kerala students were never comfortable with online recording, etc. They wanted physical classroom coaching. And I gave them option that right now I will send my videos to you. Recording is available. You watch the recording. In 15 days, when things will be normal, I will come and complete your batch. 15 days? We assumed, first time we assumed that only. By 15 days, everything will be normal. Right now, complete whatever portion you can, but don't worry. Remaining 9 days, I will complete your syllabus. Bro, that day never came on. They all watched the videos. And Zoom also became popular later. Instagram live was not there. Facebook live ke andar to it is open to everyone, no? The recordings I had sent to the students of Kerala, and with that, they got so much used to the recording, etc. that today 80% of Kerala students are in any case taking the recorded class, so I don't have to travel. But somehow, Joel, I must tell you that I have made up my mind that I want to travel to Kerala again now for taking lectures. Because believe me, when South Indians mein na, even now the students have some sense of emotion left. There are some at least who cry on the last day. And don't say, sir, khushi ka aasu. No, genuinely they cry. What do you think is the probability of being successful if I resume? If I do it, I'm on very serious note asking. That I can come, obviously I know that. I am asking you about the probability of a response. Don't say the names. So what is my suggestion to you is, for the time being, you start accumulating your friends and make them understand that at least, just don't go for the speaker who is speaking in Malayalam, because end of the day, you have to write your exam in English. See, no matter how much in Mumbai ka student with them, even if I talk to them or communicate to them in Hindi or the local language. The main point is, end of the day, your exams are being conducted in English. The law is written in English. Your answers, your interviews, everything has to be in English. You have to develop the skill of writing this language, and you have to be comfortable. Kerala is supposed to be a literate state, no? So where is the problem? Why do you want someone who speaks Malayalam? Mumbai students never want someone who speaks Marathi. Hindi, they are comfortable. English, they are absolutely comfortable, no matter which part of Mumbai they are. Ultimately, English is the language of the profession. I am not saying it's a measure of intelligence, but profession works by this language only. Law is written in this language. New income tax bill is being presented in the parliament. New ICAI bill is not being presented in the parliament. No. So, believe me, I am almost made up my mind. But then, kya hai, कि beginning of my career, I had less tantrums. Anybody giving me anything, I used to come. Of late, my expectations are actually increased. So it will materialize or won't materialize. I'll speak to you on the phone now. We'll plan something. Okay. I'll make sure I inform you. Honey, you can at least inform your friends for the time being. Okay, whoever are in, you never know. I may just come for a May 25 CA interbatch only in the month of March. I am not coming. I am काम धंधे पे focus करते हैं. I may just come. I am saying, or you never know. Few months down the line, after make a result come somewhere in the month of June, we can always in the month of July have a batch for September attempt also. And July may, if we keep September attempt ka inter ka batch, immediately in August we can keep a November attempt ka CA final ka crash course batch. Same place. 1 month. Enjoy the backwaters of Kerala, LAP, Munnar, Alappuzha और क्या Tekdi. क्या यार क्या ब्रो keep pushing. One day we will be successful, don't worry. Okay, one day we will prove to the world that number of followers on social media does not mean quality coaching. हाँ तो मित्रों, point is simple. COVID का wave came, first wave took seriously, people did not die, but so then to kill people they brought one more wave. In the second wave, more people died in 2020. But after that, people were so used to it, they're like, but they tried to bring again the third wave called Omicron. There was a brief period of 10-15 days where every person had cough, cold, fever. That was basically the time when all of us went in autoimmunity mode. It is most possibly, it is likely that we have suffered COVID and recovered from it, and we don't even know because we did not undergo test, because the only way in which COVID happens is undergoing a test. If you don't undergo test, COVID won't happen. Check kar le. And last time people died, it definitely more than 12 months ago. So the probability of taking this tax benefit compensation due to death is too less. But then we will have to bring more and more waves so that we can take the benefit out here. Understood? And the last case, ladies and gentlemen, any other notified. If they want to exempt more cases, so they will release a circular, make an announcement that following cases of gift will also be exempt. This, ladies and gentlemen, are the list of situations where gift received will not be taxable. So we are doing section 52, section 56, subsection 2, clause 10. Gift. Receipts without or inadequate consideration. Gift is taxable for all assessees, cash or kind, both. But in kind, it is selected asset, immovable property, shares and securities, sculpture, artwork, drawing, archaeological collection, painting, jewelry, and bullion. That also for the receiver, the assessee, it has to be a capital asset. However, even if the conditions are fulfilled, following cases, it will be fully exempt. First, gift received from relative. For HUF, it will be any member. But member to HUF is exempt, HUF to member will be taxable. For individual, long list of relatives given, all of them giving you any gift, it will be exempt. There are other cases also. Your marriage, then gift is going to be exempt. Death, will, inheritance, it is going to be exempt. Purchase consideration is going to be exempt. 2 cases we have of COVID, 1 we have of charitable trust, and any other notified. These cases, your gift will be fully exempt. With this, we complete the introduction of gift. Now, what we have to do is, with respect to gift, taxability, we have to make one chart. If we understand this chart, in one chart, full concept is going to get over, and with the end of the concept, our chapter is also going to get over. Introduction of gift is over, but the chart will give us the final effect of the taxability. We will do this chart after a break of 10 minutes, please. Okay, 10 minutes break. छे और व्हाट डिड यू एक्सप्लेन? नो नो कोई है, मैं आऊं? All right, ladies and gentlemen, boys and girls, the taxability of gift receipts without or for inadequate consideration. See, gift can be in the form of money or in the form of asset, and by now we know that selected assets are a part of the definition of taxable gift. In the list of assets, do you observe some gifts are assets which are movable property and some gifts are assets which are immovable property. Immovable is also covered, and then you have sculpture, artwork, drawing, archaeological collection. In case of these assets, the possibility is that the assets are received for no consideration, means free jewelry, free shares. Hello? Or you have received the asset for inadequate consideration. Hello? Please also understand that the same breakup will happen under immovable also. No consideration and inadequate. But we don't know how much space will be consumed here. So what we will do, we will finish monetary gift. Then we will finish this part. Then we will finish this part. Wherever this much gets over, we will bring the arrow and divide immovable into no consideration and inadequate consideration. So that we have our space managed. So in any case, first I am finishing the monetary gift wala part. But movable mein you understand, no consideration. 5 lakh ka gift, full gift. And inadequate is where you pay 10,000. Is it still gift? Yes, he purchased for 10,000. Still 490 will be a gift. So definition, fair market value equal to taxable. Fair market value minus amount paid equal to taxable. So very easy. The taxability has to be understood with this. First, the monetary gift. If the total, if the mitro what? Total from all taxable sources, from all taxable sources, if the total from all taxable sources exceeds rupees 50,000 in a year, then it is going to be fully taxable. If the total from all taxable sources exceeds rupees 50,000 in a year, it will be fully taxable, is what summarizes the taxability of gift. If you carefully focus and observe, I have highlighted 3 things for you: total, taxable sources, and fully taxable. If you understand these 3 things, monetary gift will get over. First, you will have to give effect to the middle box, taxable sources. A typical question on gift will be something like that. Please pay attention. Imagine this question. Mr. X has received following gifts. From his father on clearing CA Inter, 10,000. From his mother without any occasion, 40,000. From his friend, because friend did not come with him on an outstation picnic, 50,000. From his neighbor to stay away from his wife, 1 lakh. List is given. Neighbor gave, stay away from your wife, my wife. In this, examine which are the exempt ones. Father, mother, on the occasion of marriage. All the exempt ones, you make them 0. Remove them. That means you have given effect to the middle box, that is taxable sources. Remove the ones which are exempt, so you will be left with the ones which are taxable. That's your first. Second step, now take the total. Because yes, we give you a 50,000 threshold, but that is not for every transaction. Supposingly one friend gives me 40, another gives me 30. No occasion. Are both taxable? Yes. So I can't say 40 less than 50, 30 less than 50. Nice, sir. 70 greater than 50. So you have to take the total. Are we getting 50,000 limit? But total ka limit, not for every transaction. So step number 1, remove the exempt. Step number 2, take the total. Now if that total is greater than 50,001 rupee. Normally when we give gifts in wedding, 501 rupees, 501, that 1 rupee is for good luck. This 1 rupee is for bad luck. Because if it is total coming to 50,001, then 1 rupee is not taxable. 50,000. Supposingly friend 1 40, friend 2 30, both without any occasion, just day to day life, both are taxable. Step number 1. Step number 2, take the total. 70 fully taxable, 20 nahi, full 70 taxable. Supposingly friend 1 gave 40,000 due to marriage, so that 40 will become 0. Now we are left with only 30. That 30 is within the threshold, so exempt. But if both were without occasion, both taxable, 70 more than 50, full amount will be taxable. Step number 1, remove the exemptions, take the taxable. Step number 2, take the total. And step number 3, if the total is more than 50,000, so it will be fully taxable. Effectively, we can conclude by saying the rule is giving me a threshold of 50,000 rupees per year. Ye correct hai? Now let's talk about movable assets. Movable assets which are received without any consideration. Do you agree that here the gift will be nothing but the fair market value of the asset? Because you are not paying anything in return, so you get jewelry worth 5 lakh or shares worth 2 lakh or whatever you get, that full amount is going to be taxable. All right, ladies and gentlemen, full statement that you have received here is word by word copied here. If the total from all taxable sources exceeds rupees 50,000 in a year, fully taxable. So once again, what will you do? First, remove the exempt. So you are left with taxable. Middle box. Then do what? Then take the total. And then finally, if the total is more than 50,000, fully taxable. Friend 1 gives you 40,000 ka jewelry and friend 2 gives you 30,000 ka shares without any occasion. Both are taxable. Take the total, because 50,000 is not per transaction limit, total limit. Is the total 70? Full 70 is taxable. That means full rule is same. Total from all taxable sources exceed 50,000, then fully taxable. Sir, this rule you understood under monetary only? Correct? Hai? So what is that extra explanation? Please pay attention. This category has full total limit of 50,000, not every transaction. This category has full total limit of 50, not that 140, other 30, so both exempt, 70 taxable. But these two categories have separate limit of 50-50. Notice that, please. While within the category you have annual limit of 50, but separate category, separate. So in the case where one friend was giving you 40,000 shares and other was giving you 30,000 jewelry, is that 70 fully coming here and becoming taxable? Tell the first friend to give 40,000 cash. So this 40 will come under the limit, this 30 will come under the limit, both will become exempt. Understood? Understood? Can yes. Mitro, while full category has annual limit, not every transaction, but every category has separate limit. So if possible, split. But yes, the maximum split that you can do is to the extent of 50,000, but not more than that. Above that, if it goes 1 rupee also, then everything becomes taxable. So maximum planning or manipulation you can do is to the extent of 50,000. Correct? Hai? And under this inadequate, do you understand? Here what will be my gift? Fair market value minus the amount paid. Will that be my gift? Because I am paying something. Say 5 lakh, I am paying 10,000, so my gift is 4 lakh 90. All right, Mitro, one more time. If the total from all taxable sources exceeds rupees 50,000 in a year, so it will be fully taxable. Supposingly friend 1 gave me 5 lakh ka jewelry, I paid 10,000. So how much is taxable? 4.9. Friend 2 gave me 3 lakh ka shares, I paid 20,000. So my amount is 2.8. But this was on the occasion of marriage. So this I will have to remove. So only this is remaining. More than 50,000, fully taxable. Understood? Supposingly friend 1 gives me 40,000 ka jewelry and I pay him 1,000. So that becomes 39,000. And friend 2 gives me 30,000 ka shares. Him also I pay 1,000. So my gift becomes 29 without any occasion. Are both taxable? Yes. Now we will have to not apply individual limit but take total limit. Total becomes 68,000, more than 50, fully taxable. Because every category has separate limit, but within the category it is total. But you want to apply a tax planning strategy here? You want to apply the strategy? Okay. You do one thing. Tell one of the friends to give you full 40,000. Full 40,000 without any consideration. Correct? Or you give consideration, so you give in cash, don't show. So this gift will end up going in this category, and this gift will end up going in this category. Both will be able to exhaust their respective category ka 50,000 ka limit. We don't have per transaction limit, but we do have per category limit, and therefore you can split. But then maximum you can split what? You have three categories here. You can split 50, 50, 50, because beyond 51 rupee also fully taxable. So what is common in monetary gift and movable gift? First step, you remove the exempt. Now do what? Take the total, and now whatever you are left with, what to do? If it is more than 50,000, it is going to be fully taxable. Correct hai everyone? Now let's talk about immovable property. Under immovable property also, there will be two categories. You understand where the arrow is coming from? There will be two categories. What, sir? Immovable property received for no consideration, and immovable property received for inadequate consideration. Can I say these two will be the two categories here? Here, you understand the full value of the property is taxable, and here, the value minus whatever you have paid will be taxable. Makes sense? The only difference between movable and immovable is that in movable, we make the fair market value of the asset taxable, but in immovable, income tax law does not take FMV, it takes stamp duty value as the market price. So, immovable property received free of cost. We assume stamp duty value is market price, that will be taxable. And here, now, if you have really understood, tell me on the right side what will be your taxable amount. SDV is the value of the property minus the amount that you have paid. Does that make sense? At least that part is so very, very easy. So ultimately, movable, immovable ka rule is same. Only difference being in movable we use FMV, in immovable we use SDV. But now comes the main taxability difference. If it was only this much, so I would have done what you know, merged movable, immovable, and here written FMV or SDV, FMV or SDV. But the main difference comes now. Everyone is with me? What are they saying here? Immovable property received without any consideration. If the amount is greater than rupees 50,000. So we have seen this already, that we have 50-50 limit for every category. We had 50 limit for monetary gift. We had 50 limit for movable no consideration, and separate 50 limit for movable inadequate. So this we are aware, 50-50 ka limit hai. But here they have said more than 50,000. Observe mitro, per transaction. If it is more than rupees 50,000 per transaction, so it is going to be fully taxable. More than rupees 50,000 per transaction, then it is going to be fully taxable. Under monetary gift, we get annual limit of 50. Movable, both categories, we get annual limit. But here we have per transaction. I first want to see how much people are understanding. Just writing and copying is not enough. Oh, copycats. In movable, also there is 50 limit. And in immovable also we can see 50 limit. Which one is beneficial for us? Okay, it is same only. Both are 50-50. Immovable is beneficial. Why, sir? Because there, if I have shares of 40 and jewelry of 30, so total 70 is taxable. Here, if one friend gives me property worth 40,000, other friend gives me property worth 30,000, both are exempt, because every category has, every transaction has separate 50 limit. Supposingly there, one friend gives me 60,000 jewelry, other gives me 40,000 shares. So 1 lakh is taxable. Here, one friend gives me 60 ka property, other gives me 40 ka property. 60 is taxable, 40 is not. Because here the limit is per transaction. Every transaction I am going to get separate limit. So beneficial hai. While yes, on paper it does look beneficial, because every time I get 50,000 limit. What is the probability of you being able to utilize this benefit? Think about it. In which corner of the world, in which jungle of Africa, you have immovable property with market price up to 50,000? If you do have, please let me know. I also want to be an investor in property. You think I can be an investor in property? क्या ये है? एक मिनट. And Mayur is like, sir, eyes are red. My stuff is visible, sir. Mayur nahi, sorry. Pratik. अरे Mayur is his brother. Mayur ही है ना उसका नाम. दोनों का voice, appearance almost similar. But then Mayur looks elder, though he is younger. He looks elder, but they look similar. The real brother है bro. अभी काम धंधे पे. You think I can be investor in property? Yes. हाँ, if 50,000 में it is available, so I will definitely be investor in property. Correct है? Which corner of the world? See, no matter how much we say, sir, for transaction wow, but where do you have properties with stamp duty value up to 50,000? नहीं है ना? हाँ, but in exam they can ask, no, 160, 140, so 60 taxable. Unlike movable, where full 1 lakh will become taxable. 140, 130, movable 70,000 taxable. Immovable, nothing taxable because limit is per transaction. Correct or no? And here it is still possible. Please understand, because here we don't see the total value, we see the difference. Please understand. Property is worth 10 crore and I have paid 9 crore. So we target the difference. Is the difference of 1 crore more than 50,000? Yes. So this is still possible if the total is more than rupees 50,000 per transaction, because here it is per transaction. In monetary, it is category limit. In movable, both it is full category limit. But in immovable, both it is for every transaction. In no consideration, the probability is less of it being exempt because every property will have market price of more than 50. On paper, they can ask you. But in inadequate, though, practically also it is possible, no, that the difference between the price of the property and what you are paying is more than rupees 50,000, and it can be less also. Think about it. 50 lakh ka property, I paid 49 lakh 60,000. So 40,000 ka gift is not taxable. On the right side, both possibilities exist in practical life. But this side, practically, though it won't happen. Exam then they can ask you.
So अगर प्रॉपर्टी 1 करोड़ का मैं खाली 50,000 का
गिफ्ट दूंगा,
मतलब उसका भी नाम ऐड कर दूंगा,
मतलब
प्रॉपर्टी
किसका? Who is giver, who is receiver? You are giving gift of property worth 1 crore.
1 करोड़ का है और पूरा प्रॉपर्टी गिफ्ट नहीं दे रहा हूँ, सिर्फ उसमें शेयर दे रहा हूँ 50,000.
हाँ, you are only gifting a share in the property. That way you are saying.
थोड़े टाइम बाद फिर और 50,000 का.
हाँ, but property is one. Property एक ही है ना. तो either you give or you don't give. Ultimately, what मतलब are you trying to say?
पहले थोड़ा शेयर दूंगा, फिर थोड़े टाइम बाद फिर और थोड़ा शेयर.
So obviously, when they say here, so we will consider the entire property as one property. मतलब are you trying to say कि एक property है जिसका market price is 1 crore? So I am doing what 1 crore divided by 49,000 equal to number of transactions, and I am gifting that much share. See, assessing officer is not customer. Customer, you understand? बोलने को तो you can say whatever. मतलब you are saying that every time you are doing a release deed of that much share, which is worth market price of 49,000, 49,000, 49,000, 49,000 every time till you reach
1 crore.
And what if property का value is 10 crore? I would prefer to pay tax, bro. No, bro, listen. Ultimately, if it is one property, no, for the receiver, it is going to be taxable. You are releasing in bits and parts, but the total value released of this particular property, we are saying it property by property, is the total value exceeding 50,000 rupees, it is going to be taxable. Maximum that you can do to avoid getting caught is that multiple release deeds do in multiple financial years. Then you won't be easily caught. See, same financial year, you do 100 transactions, you do 49,000 into 365 release deeds. You have got no other, क्योंकि release deed के लिए you have to go to the register officer. They make you sit, your number comes, you have to give your thumb. So 365 days you are going there. But if you do in the same year, you still get caught. So preferably you should do 49,000 year on year basis. So every year you will go till your 49,000 becomes 1 crore. No matter how much you can make it sound theoretically, you also understand the practicality of it. And ultimately, if it is one property, it is going to be taxable. Are we clear? You understand on the right side, so practically and theoretically, both ways it is possible. So yes, if the difference is given. If the difference is more than, so it is going to be fully taxable. Difference more than 50,000, it will be fully taxable. Everyone is with me? But subject to the following points. Point number 1. We are giving you an option. If it is option, we will exercise only if it is beneficial. What is that option? You can take agreement date stamp duty value instead of possession date. We have seen this facility from the seller's point of view. Now we are talking about the buyer. For the seller, we apply 50C of capital gain or 43CA of PGBP. But when the seller is selling at lower than stamp duty value, the buyer is buying also at lower than stamp duty value. For the buyer, that difference is becoming taxable. So we can let him take agreement date stamp duty value instead of possession date stamp duty value. Do you remember the condition for giving this facility? If some consideration, they have not defined it, some consideration. Now there we say received because we were talking about the seller, but here we are talking about the buyer who is buying at less than market price. So some consideration paid at the time of agreement in the 3 allowed modes. Same facility, exact same facility available for seller. Under, bro, seller also has same facility. Under 43CA, if the asset is stock in trade, and 50C if it is capital asset, and this facility is given to the buyer. Please understand, we do the agreement here. That means I am selling the property to you and we do the possession. As a seller, I am going to record my capital gain or PGBP on this date, and as a buyer, you are getting property on this date. So ideally, we check stamp duty value of this date and compare it with what you are paying. But is it possible that at the time of agreement, there was some advance in allowed mode? So if there was an advance in allowed mode, my simple question to you is the seller also allowed to take stamp duty value from here? Then the buyer will also be allowed to take stamp duty value from there to compare. Supposingly stamp duty value here was 5 crore. Here it is 6 crore. And the actual transaction was done in 4.5 crore. Correct? Hai? Now, when the seller gave you possession, what is the stamp duty value? 6 crore. Correct? Hai? And actual 4.5. Hello. So whichever is higher, our answer is coming to 6. But can we take agreement date stamp duty value as selling price? Yes, because the advance was paid in the allowed mode. So we will take 5 crore as selling price for the seller. Now let's talk about the buyer. Buyer is getting the house on this date. Everyone agrees. The date on which buyer is getting the house, what is the value of the house? 6 crore, for which he has paid only 4.5 crore. That means that way the gift is coming to 1.5 crore. But did he give an advance here in allowed mode? So can we take this stamp duty value? Yes. So we will take tax only on 50 lakh. We will not take on 1.5. We will not take 6 crore. We will take 5 crore. This stamp duty value we can take from the agreement date instead of the possession date. The same facility which we were giving to the seller under PGBP capital gain is what we are giving to the buyer under IFOS. Correct or no? Hello. And second, see if this is also familiar. If the difference is up to 10% of actual, Never apply this 10% on stamp duty value. If the difference is up to 10% of actual, there will be no taxable gift. This facility was also given to the seller. This facility is given to the buyer. So do you realize, for the seller and for the buyer, there are two common benefits. Benefit number one, agreement date stamp duty value. Benefit number two, 10% margin. But both of them have a third benefit which is different. Seller can call for valuation officer to get an in-between value. Buyer does not have that facility. And buyer has 50,000 ka limit, which seller does not have. You understand? So the two common facilities are agreement date and 10%. But different is seller has VO and buyer has 50,000. Correct or no? So now we will take some example from the buyer point of view. Means this is what you are paying as a buyer. Difference is your income, no? We will take stamp duty value. We will take actual so that we know what is the difference. Is the difference within 10% or more than 10%? By the way, this difference you'll check as a percentage of always the actual. And finally, what is going to be my taxable gift? How much difference is permissible? 10%. Everyone is with me? If the difference is more than 10%, so will the difference be, and by the way, here the difference is taxable gift. Please understand, I see a lot of students get confused. Seller has to show one of them as sale consideration, whichever is higher. Subject to the difference being within the limit, then we directly take the actual. But buyer does not have to pay tax on this amount. Buyer has to pay tax on this. Buyer ka income is the difference. Okay. Buyer will pay tax on difference, but seller will pay tax on one of them. You understand? Supposingly the difference is within 10% range. So buyer does not have to pay tax. But seller still has to pay tax on actual, not on stamp duty value, but on actual, because the difference is within the. I hope you don't make the mistake of saying, sir, difference is within 10%. So seller ka income exempt. No, sir. Difference is within 10%. So seller will pay tax on actual. And buyer won't pay tax at all. No confusion? Sir. Huh. That we will see now. Let us do some examples. Okay. Supposingly the stamp duty value is 3,40,000 and actual is 3 lakh. What is the difference? Can I say I have paid 40,000 less than the market price? Is this within 10% or more than 10%? More than 10%. See, if it was within 10%, so there is no IFOS. But this is more than 10%. So how much will be taxable for the buyer? Nothing. 50,000. Nothing will be taxed. For IFOS to come, the difference has to be more than 50,000 and more than 10%. Up to allowed in 40,000. If it is greater than 50, then only it is taxable. If it is greater than 50, chal theek hai. 3.5 lakh, 3 lakh, 50,000. Is it still more than 10%? Nil, as it is not greater than. So you can say less than or equal to, both of them will not be taxable, because gift is taxable only when it is, we have written more than 50 per transaction. We have written more than 50, then it is taxable. Is that clear? Okay. Next, 6 crore. Achha, by the way, tell me one thing. In these two cases, buyer did not have any IFOs. Correct? Hai? So seller will have PGBP capital gain or no? Seller will have, and he will offer this amount as the sale consideration. No! He does not have 50,000 ka facility. He has only 10% ka facility. Is the difference more than 10%? So he has to pay tax on this amount only. Understood? He does not have 50,000 ka facility. Here what is the difference? 1 crore. Is it more than 10%? And is it more than 50,000 also? So buyer ka taxable gift 1 crore. Is the seller going to pay tax? On what amount? 6 crore. Okay, fantastic. 5.5 crore, 5 crore, 50 lakh. First tell me IFOS of the buyer. 50 lakhs. Rubbish. Nil. Sir, why nil? As it is not exceeding 10%. Understood? If it is 10% of actual, no? So 5 crore ka 10% is how much? So is it exact 10%? So buyer does not have any IFOS. What about seller? Does seller have capital gain or PGBP based on whether it is stock in trade or capital asset? Does seller have income? Yes. Be very careful this time which amount he will take as sale consideration. 5 crore. Sir, why? Because he has 10% facility. He does not have 50,000 facility, but he does have 10% capacity. Understood? Any other example you want to create if there is any confusion? See, understand. In seller's point of view, we have to consider only 10%. If the difference is more than 10%, then he has to pay tax on the sale. In buyer's point of view, we have to consider this difference should be more than two things. It should be more than 50,000 as well as more than 10%. Here it was not taxable as it was not exceeding 50. Here it is not taxable as it is not exceeding 10%. Even if this guy is not paying tax, seller will always pay tax. Seller ka that rule is different. We have to choose whichever is higher. Within 10% you can choose actual, but 50,000 facility is not available. Everyone is clear? Ladies and gentlemen, boys and girls, Devyo, Sajjano, Mitro, congratulations, Badai ho, Abhinandan. Today marks a historic day in your career because today is that day where you have actually completed the 5 heads of income. Compare yourself with what you were. Virat Kohli goes outside to perform and Justina Bieber comes to India to perform. Foreigner. Arey foreigner nahi re, non-resident. Result is in no one's control. Of course, it is in your control, but we want to take pride at least in the knowledge that we have gained. Achha, let's go to the questions of IFOs. In question number 121, I think everybody had doubt. No? Question 121, no? Capital gain. This is everybody when I say those who have sold. See. I have sold the asset on 10th March. Compulsorily acquired and I have received compensation. Hello. Do you understand this is a depreciable asset? In depreciable asset, what do you consider as WDV? What do you consider? Cost of acquisition is WDV. Correct or no? So, please understand that in the first case, we have purchased the new asset within the same financial year. And do you know how we make a block? Opening plus purchases of the full year minus sale of the full year, which is your compensation ka amount, 80 lakhs. So first we will take opening WDV. Here the new asset was purchased in the same year, but this 7th April is next year. So opening WDV is same. Here there will be purchases. Here we can't add purchases because these purchases took place in the next year. But sale took place in the same year. Now we have idea that we will say maximum. We can subtract the value in the block. So that will be capital gain. Hello. What will be the capital gain? Here it will be 80 minus 60 and here it will be 80 minus 50, giving you excuse me 20 and 30 respectively. From that, what is the investment that we have made? Because this is industrial land and building. So we can within 2 years invest, no? 10 lakh rupees ka investment we have made. So that 10 lakh is going to be subtracted as your exemption from your capital gain. So what was the doubt? What was the sum? Because when I came to class, I saw some people doing time pass, fooling around. I checked their notebooks and they said 121 mein doubt hai. Then I asked the other people. Everyone said 121, 121, 121. So what was the doubt? Is the doubt sorted? If the purchase is taking place in the same year, so you have to add in the block because block we make at the last day of the year. So opening WDV, full year purchases and then we consider the sales. But in the second case, the purchase took place on 7th of April. Correct? Hai? So we can't add that purchase in the block. But are both purchases within 2 years of sale? Within 3 years of sale, 54D. So we are allowed to take the exemption Exemption of 54D, the investment in new industrial land. Any other question which anybody had doubt? 115 may be doubt. I think there is some printing I'll tell you what the problem is. There was a printing mistake in one or two questions which I rectified already, but some students की book के अंदर probably that mistake will still be there. Is your doubt about the date of sale which has taken place prior period में still cost of वो date I have corrected. जिसकी book में correction है, you tell me what is the date of sale printed other than 25th April, any other date is printed? सबका 25th April है. If it is 25th April in all the books, this has to be index cost of acquisition. But then students in the previous batch also pointed it out. I said now then for all future purposes indexation is gone. So instead of correcting so much, I made them simply do this as 25th October. So that what happens is whatever is the solution becomes correct for you. And this is only a temporary phase where a part of a year rule is different, another part rule is different. Next year ka student 1st April I write also no, still the answer is going to remain same only. So I made them change this, make this change. Okay. Acha, no other doubt in this question? I wonder how people solved it correctly then, without checking the date. 120. I think similar printing error udhar bhi hoga. Acha, what is reverse mortgage you want to know? Okay, let me make you understand what is reverse mortgage. You will understand. Okay. Mortgage everyone knows. I give my asset to the bank and bank gives me loan. Reverse mortgage is available to senior citizens. Supposingly senior citizen has lots and lots of asset but does not have cash flow. So I will approach a bank and say that every month give me 50,000. And after I die, and I am senior citizen, I am going to die very soon, my following assets will be yours. So bank will first do some calculation that 50,000 per month you are asking. So 1 year ka 6 lakh. I presume that you are going to live for another 10 years. So we have to give you total of 60 lakh. That also 50,000. And your assets are worth 2 crore. I think it is worth it. So the bank will go for the transaction. So right now senior citizen is getting every month 50,000 as maintenance from the bank. And bank has safety that after his death we will take away the asset. This 50,000 received by the senior citizen is exempt under section 10, reverse mortgage. Money received by senior citizen is going to be exempt. This much explanation everyone is clear. Till now there is no capital gain. Till now there is no capital gain. 50,000 received by the senior citizen as maintenance under reverse mortgage from bank. Meaning understood, no? So then in your own words you may write it somewhere so that later on when you revise it is visible to you. Senior citizen getting maintenance money by mortgaging asset which will be given after death. Senior citizen getting maintenance money from bank by mortgaging assets which bank will take over after death. Which bank will take over after death. That's reverse mortgage. Everyone is with me? So is the senior citizen getting monthly money? That is going to be fully exempt. Fully exempt. Fully exempt. Ye clear hai? Now listen. After the senior citizen dies, guess what should be the process? Bank will come and take over. But then one of the legal heir came and told the bank, listen, this property belongs to my ancestors. You take your money back with interest. Please give me this. Some legal heirs sometimes agree to pay the bank loan or the bank benefit taken by senior citizen with interest, and banks are happy in that interest. In the reverse mortgage agreement itself, they write, if your legal heir comes and pays us money with the interest, we will release. So legal heir has taken away the asset. Still there is no capital gain because you are only inheriting. Now finally the legal heir will sell. So there will be capital gains. Sale consideration actual, cost to the previous owner, and I must tell you this, that the amount that you paid to get the property released from the bank as legal heir is also your cost, but cost to previous owner does not include it, so it is allowed as separate cost of improvement. Index or not, that depends on what date you are selling. The total amount that you are paying means you are paying the full bank money with interest. Don't think about the bank perspective. As the legal heir, the total amount that you are paying is paid to get better title from the bank. So for you, the total amount will become cost of improvement. Improvement ही होगा ना for a better title over the property. Without this payment, bank wouldn't have released. No? So you are getting clear title only because you are paying this. By the way, the question is not on all that. Question is simple. When the legal heir will sell, will there be capital gains? Yes. So true. Yes, there will be capital. Final transfer. Yes, there will be capital. Clear hai? No other confusion? Sure. Let's go to the questions of our chapter. Income from other sources. IFOS. Question number 125. Page number 152. 125, 152. Please read the question. चल रहे खुद का ही माल भोग लिया.
Mr. X has received the following gifts. A particular amount solution. 1st November 24 from friend on birthday 40,000.
Now please understand. We have to decide whether we will take this. Now what some people react by saying is, sir, less than 50, so we won't take. Then you're making a big mistake. We don't get 50,000 ka limit per transaction. We have to from this choose the taxable. First step is choose the taxable. Supposingly it is exempt, I will make it 0. It is taxable, I will take the amount. Then last mein I will do total and decide taxable or not taxable. No. So first you will only decide that is it a taxable case or not a taxable case. Taxable, that means here I will write 40,000. Total I will take in the end.
1st December 24 from father's brother's house.
Okay, taxable or not taxable? By Chachi, relative. From today we call her Chachi. Okay. Next.
11th December 24 from friends on the occasion of marriage.
On the occasion of marriage, not taxable. Okay. Next.
15th December 24 from educational institution scholarship 35,000.
Not taxable. Scholarship. Okay. Next.
18th December 24 from friend Mr. C 17,000.
Is it taxable? Oh boy, you know what this 17 will end up doing. Now this 57 becomes greater than 50 and therefore it will become fully taxable. Understood? Understood? In 40 and 17 we don't get separate limits. Clear hai? Chalo. Second.
X received the following buildings as gift. 1st July 24 40,000 from previous owner. Stamp duty value 50,000.
Take second. What is the cost of the previous owner? 40,000. And what is the value? 50. So you will pay tax on 10,000. Difference. Tumhara matha, pagal, gadeda. Please understand, he is getting the asset absolutely free. It is not you paying the previous owner. Previous owner purchased and gave it to you. So you are not paying anything. This is a case of no consideration. I have seen so many smart people getting fooled by this table. Like, oh sir, this is what this is not what you paid. Previous owner paid. This column is absolutely irrelevant. Your stamp duty value is 50,000 and you are getting it free of cost. You have to decide taxable or not taxable. Free gift hai 50,000. Neil, 50 hai. More than. But then total pay we will apply. No, immovable it is per transaction. Very smart. Very good. Nil. Okay, next.
1st November 24 30,000 88,000.
Once we realize that cost to the previous owner ka column that way becomes irrelevant. We just have to decide, is this 88,000 going to be taxable? You won't wait for total? No, because here per transaction and therefore yes, 88,000 will be taxable.
1st December 24 35,000 received from father's brother. Stamp duty value 2 lakhs.
This time you have got you received gift of 2 lakh. So we will have to pay tax on? No. Relative. Nil as relative.
1st January 25 2 lakhs held as stock in trade 90,000.
Nil. Why? Because not a capital asset. Of course, sometimes some people in the past have got confused. Sir, it is stock in trade of previous owner. Then they would have specified. Or if you are confused, for current owner also. No confusion. Not that it was his stock in trade and my capital asset. It is stock in trade for both. Okay, 127.
X purchased property on 1st April 24 for 20 lakhs. This is gifted to Y on 1st December 24 when stamp duty value was 35 lakhs. Y sold it on 1st February 25 for 52 lakhs. Discuss the tax implication for X and for Y.
Question number 127. 3 transactions are given. Let's discuss them one by one. When X purchases, bro, what can be the tax treatment at that time? Obviously, no tax treatment. Second transaction, when X gives it to Y, we'll answer them for assessee by assessee. For X, think about it as X. What is X doing? Gifting. So let's do X ka income computation in this. No capital gain, as gift is not a taxable transfer. Correct hai? And let's talk about it for Y. Y is getting the property free of cost. When the stamp duty value is 35 lakh. So do you realize for Y it is going to be income from other sources, taxable gift of 35 lakh. Free of cost is getting, correct or no? And third case, sale by Y. So this time there will be capital gain on whom? Y. What is sale consideration of Y? 52 lakh. From this we will take kaua. Gift hai, so will we take cost to the previous owner? No sir. I have already paid tax on 35 lakh. So that FMV of 35 lakh on which I have paid tax will become my cost of acquisition, giving me short term capital gain of 17. 17, 52 and 35. Understood everyone? When we have paid tax on FMV, then FMV will become our cost of acquisition. So, question number 128.
What would be your answer if Y received gifts from relative Mr. X on 1st December 24?
So this time the assessee is the giver is your relative. First transaction still remains same. Sir, why? Because X ka purchase cannot attract any tax treatment. What is second transaction? X is gifting to Y. For X, what is the tax treatment? Still same, because not a capital asset. But for Y, what did we do last time? We called it IFOS. 35 lakh. This time how much will be taxable? Okay. तो ये सेल नहीं है ना. What is the second transaction? What is the second transaction? When Y will sell, at that time we talk about that. No, you have to talk about the transaction one at a time. Why am I doing it one at a time? So that there is no confusion. You first receive, then you will sell. No. So receive ka we are discussing now. Correct? And third. Kya? Sale by. Now this time there will be capital gains for Y. Sale consideration 52 lakh. And what will be cost this time? Cost of acquisition will be cost to the previous owner. That is, this time you can say 20 hai, giving you capital gain of 32 lakh. Understood? This is the concept where we say if gift is taxable, then we take FMV as cost, and gift is not taxable, then we take cost to the previous owner. Beginning of today's class we discussed it. Question number 129. देखते 129 तो we can do in the book itself. चलो.
Mr. X has purchased the following properties during the previous year 24-25.
Purchase property is gift. नहीं ना? If we pay inadequate, it is gift. चलो तो what have they given us?
Particulars purchased by stamp duty value. Land in Kolkata 10 lakhs, 15 lakhs.
So have you paid less than the market price? How much will be your taxable gift? 5 lakhs. Supposingly this was agricultural land, then not a capital asset, because Kolkata is rural area. Still it will be same. अबे rural agricultural is not a capital asset. This is urban. 5 lakh will still be taxable. You will need lots and lots of practice because these are the twists that will come in your question. Next.
Commercial building in Delhi, 10 lakhs stock in trade, 12 lakhs, 20 lakhs.
So again, can I say 8 lakh is the discount that I got? Taxable? No. Why? Nil as stock. Next.
Residential house in Mumbai, from his relative, 10 lakhs, 25 lakhs.
Nil. Why? Next.
Land in Bangalore, 15 lakhs, 15 lakhs, 50,000.
This is not relative or stock in trade. So this time we will pay tax on 9. Why? Nil as not exceeding 50,000. Next.
Agricultural land in rural India, 5 lakhs, 10 lakhs.
Nil. Why, sir? Not a capital asset. Next.
Vacant land in Kolkata, 50% billed in advance on or before agreement is checked, 10 lakhs, 15 lakhs on date of registration, 12 lakhs on date of agreement.
So we have two stamp duty values. Which one is beneficial? Obviously lower. So do we have the option of taking that? Yes. Why do we have the option of taking? Because as advance was in allowed mode, we are allowed to take 12 lakh, and your comparison between 10 lakh and 12 lakh will give you taxable income of, because that 2 lakh is greater than 50,000 as well as greater than 10%. Correct hai? Chalo, next.
X receives the following gifts: date, asset, FFP, cost of previous owner. 1st July 24, shares, stock in trade, 60,000, 40,000.
How much will be taxable? Nil. Why? Stock in trade. Okay, very good. Next.
1st December 24, furniture, 90,000, 60,000.
How much will be taxable? Nil. Furniture is not there in the list of sculpture, artwork, drawing, archaeological collection, painting, jewelry. It has to be selected asset. Car, furniture, not taxable, hai bro. Next.
1st December 24, jewelry from relative, 80,000, 40,000.
Nil. Jewelry is relative, so nil. Next.
1st December 24, jewelry, 35,000, 20,000.
This time it is not relative. Will it be taxable? Yes. Rupees 15. No. So how much will be taxable? Less than 50,000. So zero. No? Gadade log. In movable properties, we don't apply 50 ka limit per transaction. We will apply 50 limit on this. So first decide the taxable component, then apply on the total. See, immovable we do per transaction. Movable apply on the total. So right now you have to take the taxable part. That is rupees 15. Rubbish! Cost to the previous owner is irrelevant, bro. I have received the asset as gift. I have not paid the previous owner. Previous owner paid it. Hello. Next.
11 December 24, drawing and paintings, 40,000, 30,000.
हाँ तो taxable 10,000 नहीं 40,000 नहीं less than 50 no total पे we will apply. Next.
11th January 25, median, 60,000, 20,000.
We are not interested in cost to the previous owner, so we will pay tax on 60,000. And
10th February 25, car, 4 lakhs, 5 lakhs.
we are not interested in 5 lakh. We will pay tax on you. Car is not covered in the list, and therefore taxable will be 1,35,000. Correct. Next.
Mr. X purchased the following property. Date of purchase, asset, purchase price,
Purchase. Is it taxable? Is it taxable, Chandu? If you have paid less than the market price, yes, it is taxable. So we will see this time, we will see the difference, and every time we'll check 50-50 ka limit. No, nahi. In movable property limit is on total. Yes, please. So one by one.
1st December 24, jewelry 40,000, 50,000.
40,000 will be taxable. Hello. Now, are you thinking that no, sir, this is less than 50? No. Why? Because we have to see the total. Okay, next.
1st November 24, furniture 30,000, 55,000.
So, can I say we'll take 25,000? No, because furniture is not in the list. Next.
15th Feb 25, paintings 65,000, 95,000.
Will we take it? Yes, 30,000. Next.
10th Feb 25, billion 50,000, 85,000.
So, 35,000. Yes or no, the difference? And then
18th Feb 25, shares 4 lakh 6 lakh 50,000.
note.
Notes shares held in stock as stock in trade.
Because that note will affect your answer. Without that, your answer would have been 250 here. But with that, your answer becomes 0 because held as stock in trade 1,05,000 is greater than 50,000. Therefore, taxable. Correct hai? Next. 132.
Following properties were purchased by Mr. X come to taxable amount.
He purchased. Still taxable. Sir, why taxable? Because inadequate. To avoid going to the previous page again and again, this is the purchase price and this is the stamp duty value, so that you don't have to flip the page again and again. Okay? Ha, please.
Property 1, 25 lakhs, 45 lakhs.
Ha, to? Is there any amount taxable? How much is that difference? Kya calculator you are using? Purchase, na? Purchase! After doing it so many times, some to are giving frustrated reaction. Kai re, parat kai pad. We have understood that purchase is still a gift if we pay less than market price. Ramayan over. Now somebody is asking, sir, Ram kon? So difference is still taxable. 20 lakh, and you are checking on the calculator difference of 25 and 45. 20 lakh rupees is taxable or no? Yeah, but we have to see the total, no? Per transaction. In any case, it is more only. Okay, next.
Second, nil gift 45 lakhs.
Obviously, because if it is gift, then in that case, there is no discussion only. Full 45 is going to be taxable only. Per transaction also more than 50,000. Next.
Third, 1 crore, 1 crore, 2 lakhs.
So what is the difference? 2 lakh is taxable or no?
Not taxable.
Not a capital asset. Why not taxable? Less than 10%. Because it is less than 10%, it is going to be nil. Correct or no? Okay, next.
Fourth, 5 lakhs, 5 lakh 40,000.
Nil. Less than 50 also and less than 10% also. Okay.
Fifth, 10 lakhs, 15 lakhs.
What will be taxable? Hello. Will there be some taxable? Yes, 5 lakhs. Sir, why 5 lakh is taxable? Because 5 lakh is greater than 10% as well as 50,000. Correct hai? Without opening your mouth, only with your pen and your calculator and notebook, you will be solving question 133 by yourself right now. This is similar to X and Y ka question that I did with you. I don't want to hear any sound from anyone.
सिर्फ खड़े रहने बोला है, किसी से बात नहीं करना है इसलिए।
Oh, Cheta, it was not a break. Do you remember the question of X and Y? Quite similar to that. First, Ramesh purchased, then sold to Suresh this time. When Ramesh sold it, the actual selling price is 65, but the stamp duty value is 95. So discuss the tax implications for both of them. See, when Ramesh is purchasing, there cannot be any tax treatment. Ultimately, it is only going to be sale from R to S. Let's talk about capital gain for Ramesh. What is sale consideration? So we will take sale consideration as 65 lakh here, is it? No. What will we take as sale consideration? The actual amount of 65 or the stamp duty value of 95. What's your final answer? As the difference is अरे डोंकी भी होता है. I apologize. क्या था? हाँ, स्टैम्प ड्यूटी 95 lakh. करेक्ट है. Now what? Minus the cost of acquisition. What was his cost of acquisition? 35. तो कौवा और आई कौवा. Why? हाँ, short term. Purchased on 1st April, sold on 10th May. कौवा of 35 है ना? Giving you 30 साल of 60 lakh. Now let's talk about Suresh. Sir, Suresh has to receive, no? He has paid money and received. The purchase transaction does not require tax, does not attract tax. Purchase also attracts tax. How? Because you paid inadequate consideration, purchased for inadequate consideration, and therefore Suresh will have to pay tax on the difference of 95 minus 65, that difference of 30 lakh. Do you understand? Greater than 10% and greater than 50,000, and therefore this is going to be taxable. Correct? Chalo. Question number 134. By the way, from here there are all the solved questions. One of them I am doing with you.
Mr. X has got the gift during the previous year 24-25. Compute income taxable under section 6, exception 2, clause X.
Clause
A cash gift 3 lakhs and 2 lakhs received from son and daughter-in-law of Karta respectively.
Let us here only decide which one of them is taxable. Supposingly it is taxable, then I will write the amount, and if it is not taxable, I will write 0. Then final mein whatever we have written, uska total we will take. First 3 lakh received from son, and second 2 lakh from daughter-in-law. Which one of them is taxable? Which one is exempt? Both are exempt. Sir, why? Because member of HF, son and daughter-in-law will member or no? So can I say this will be nil and nil? So last mein whatever we have written, those amounts ka we will take total. Second.
2 lakhs and 1 lakh received from married daughter and from son-in-law of Karta respectively.
Now what? Taxable or not taxable? Taxable. Why? Not a member. See, if daughter is married, so she is member of HUF of her husband, and son-in-law, bro, whatever your plans may be. whatever may be your plans, to go and settle there only. घर जमाई, हाँ वो घर जमाई भी कौन मालूम है ना? Of course, you won't be a part of that HUF. Bro, stop living in false dreams like me, false hopes like me. नहीं, तो for you, non-relative, therefore this 2 plus 1, both of them will be taxable. 2 lakh plus 1 lakh, both taxable. Next.
50,000 and 10,000 received from granddaughter, daughter's daughter, and grandson's son of Karta respectively.
Come on, tell me, which one of them is taxable? 50, 10 के both. Both are not taxable. Wrong answer. 50,000 is taxable. Sir, why? Because daughter's daughter is in her father's HUF, but son's son is your HUF. So this is going to be taxable. This is going to be exempt, and thus 50,000 taxable, 10,000 exempt. Understood? Next, kind gift.
Motor car valued at 5 lakhs received from niece, sister's son of Karta.
Nephew niece not relative for individual also. अच्छा motor car है 0. Okay, next.
Shares fair market value 2 lakhs received from operator of Karta.
Now shares are covered in the list, and 2 lakh will be taxable, and thus giving you the total taxable gift in this question of 2 plus 1 3, 350, and 2 lakh 5 lakh 50,000. I told you all the questions now are solved, and believe me, IFOS onwards, rest of your syllabus also, complications are there in salary, PGBP, and capital gain. But salary, PGBP, capital gain comprise of 25 to 30 marks, and that makes 60% of your paper in any case. So end of the day, they are indispensable. The limited 3-4 questions that are remaining, that much you will have to do by yourself. That amendment of 222F also I have covered with you. Buyback wala. Hello. Oh wait, I still want to do some questions with you. Wait. Dim dividend ka some questions I will do. I won't give you all of them to do by yourself. Chal na re. Please. Chal na yaar. Gana. Who is a good singer in your class?
Akash.
He is not a good singer. देख शिवम, जस्ट जनरल सजेशन दे रहा हूँ. नेक्स्ट टाइम इफ यू डोंट वांट टू लॉक नो, तो अंदर से गाना गा ले. चल शिवम, स्टार्ट सिंगिंग. यू विल प्रैक्टिस. अभी टैब इज नॉट वर्किंग, तो 2 मिनट्स का टाइम भी है. इट इज टेकिंग इट्स ओन टाइम. चल ना, एनीथिंग. अरे वो प्रपोज देख का देख, टैब इज नॉट वर्किंग ओनली अनलेस एंड अंटिल यू सिंग. चल ना शिवम, फटाफट चलना है. ए प्लीज शिवम, जा भाड़ में जा शिवम. क्वेश्चन 137. एक मिनट, व्हाट इज द लास्ट वी डिड? 134 नो? 135, 136 you will have to, है ही नहीं, printing mistake है, numbering. 137 is on page number 156. I want to do some of the questions of deemed dividend with you.
X Limited has distributed a set of 700 lakhs to its shareholders. The company has accumulated profits of 500 lakhs. Discuss the tax consequence.
See, capital gain का part comes only in liquidation, but IFOS का part comes in day-to-day going concern also. In 222A, have we distributed money or money's worth? Yes. So asset also distributed is deemed dividend, but that cannot exceed the free reserves, and therefore maximum deemed dividend will be equal to 5 crore. Okay, 138.
Consider the following data. Share capital 500 lakhs, including bonus shares of 100 lakhs. Profit and loss account 600 lakhs. General reserve 200 lakhs. The company has distributed debentures of 1200 lakhs.
एक मिनट. Debentures of 1200 lakhs to shareholders. But 1200 lakh to each shareholder, a company will have to consume poison and commit suicide. How can it be each shareholder 12 crore? No, bro. Total distributed 1200 lakh. I discuss the tax implication. Can I say we have given free debentures? And free debentures given to shareholders are deemed dividend, but the deemed dividend cannot exceed your free reserves. So even if our distribution is 1200 lakh, the dividend amount will be maximum free reserve. Is P&L free reserve? Yes. General reserve is free reserve? Yes. So the maximum amount we will take is going to be 800. No, 900, including bonus. Bonus will be included in all the cases of deemed dividend except 222E. Correct hai? Chalo. Next is 139. Next page.
X Private Limited gives a loan of 5 lakhs to shareholder Mr. X holding 12% voting power in the company. The company has accumulated profits of 7 lakhs. Besides this, share capital of the company is 10 lakhs, including bonus shares 1 lakh. The loan is refunded by the shareholder after 5 days. Discuss.
If this is loan transaction, how can loan have any tax impact? No, more than 10 or more. Is this a beneficial shareholder? In a private company, and the private company has given loan to beneficial shareholder, then it is going to be considered as deemed dividend. Yes or no? Sir, he has repaid within 1 week. Still, sir, what if he has paid interest? Still, but the maximum dividend will be equal to the free reserve. Of course, this 5 lakh is within the reserves, and even if there is bonus of 1 lakh, remember that for 222E we have to ignore the bonus. Bonus has to be considered only in 222A, B, C, D. Correct hai? So 5 lakh finally will become your amount of deemed dividend. That's it. There are about 2, 3, 4 questions that you will have to be doing by yourself. At least that much. If you don't, then again, even if it is an easy chapter, little practice is required for yourself. And this, ladies and gentlemen, takes you to that historic day. This is the historic day where we can proudly claim and conclude that we are, ladies and gentlemen, done with 80 तो खत्म हो गया था in capital gain only. So you can say 85%. We are done with the 5 heads of income. Our syllabus was over long ago. Only 2 things were left. Kya? NTTI and tax. Now from that, NTTI? No, bro. We are still 3 chapters away from completing NTTI. NTTI has 9 chapters. We have completed 6. Exempt income, that is incomes which are not taxable, and 5 heads of income. We have completed only that much, bro. Are you correct or no? Hello. We still have to do clubbing of income, set off and carry forward of losses, and deductions under chapter 6, which will bring our NTTI. And thereafter, tax calculation ka 3 chapters and other general points like return filing, TDS, TCS, advance tax, etc. But yes, now it may appear like, sir, that means so much is remaining. We are roughly 10 to 12 lectures away now from syllabus completion. मैं बता how should you? What time is your next lecture? Acha, 4:30 only. Okay, because I am in 2 minds actually. Clubbing of income, if I start now, my next lecture will be Thursday. Acha, tell me one more thing. Out of all the questions of capital gain that I gave you to solve by yourself, whatever you are asked, I sorted. Any other doubt remaining to be asked or pending or not discussed? No. So all your doubts regarding capital gain are also sorted. And how many people have not completed the capital gain questions? Class book ka questions. I am not asking about additional question bank. Class ka all questions are done. Additional question bank till PGBP done. Still some questions are remaining. That means every time you feel कि अरे wow 340 अगर सर छोड़ भी दे तो we have 45-minute break. हाँ, I told you have to bring every day. You are asking me the same question. So even today you don't have it. मारेगा ना पकड़ के. Every day till the time my lecture is going on, you have to be carrying the additional question bank. How many people have completed salary ka questions? Additional question bank ka salary question. So basically PGBP is pending because right now it is time for capital gain. PGBP also you must have started if salary is over. PGBP being the big chapter that it is, by now it is not over, and which is understandable. Okay, because I don't want to had it been, tomorrow continuation, so I would have started the chapter. Okay, at least do it for 20 minutes. But 4 days ka gap hai. I don't want to start a chapter for this big gap. So I will be seeing you on Thursday. Now, this gap has to be to cover up your lag. Thursday you should be saying, sir, capital gain bhi ho gaya. Forget about PGBP. Capital gain done, no. So just imagine, from Thursday onwards, size of chapter small. The additional question bank, the number of questions also small. It is likely that every chapter you are parallelly only completing. Because this is the only place, salary, capital gain and PGBP, where students who stay behind remain behind only. There cannot be a better opportunity than this for you to recover from the lag that you are in. I am going to see you guys on Thursday. You have these 20 minutes also. You please make sure you are solving 2 sums. Take your break from 4 to 4:30. Okay? So I will see you guys on Thursday now.